Okay, so let's move on to the next segment where our educator is here. His name is Jeff Badu, and he is the founder of Badu Taxes. Okay, so he is the best in the business. He is a certified public accountant, and he has an entire team that has all of the resources and expertise available to help you when it comes to your taxes. So he's an expert when it comes to taxes dealing with entities like your LLCs, corporations, and trusts. So today he's going to be teaching you about trust taxes. So he's going to go over the 1041 and he's going to answer any and all questions that you guys might have. So he is our trusted resource and recommended advisor in this space. And so I'm so grateful that he's here to educate you guys. As always, Mr. Jeff Badu, thank you so much for being here. You have the floor.
Absolutely. Thank you, Christina. How you doing today?
I am wonderful. It is Friday.
Amen to that. Yeah, the best day
Yeah,
of the week.
yeah, I know, right? TGIF.
Amen to that. Amen to that. Appreciate that, Christina. And so appreciate everybody for joining today. Hope everyone is having a great and abundant Friday so far. And so, yeah, basically, Christina and the team have tasked me to talk about trust taxes, how to navigate between the different tax forms, the tax returns, tax strategies, and everything like that. And by the way, happy tax season to everybody. We are in the tax season, right? We just got 5 days left or so. And so, hope everybody is having a great tax season so far. And so let me just share my screen real quick, just go over a quick intro of who I am. So my name is Jeff Badu. I'm a licensed certified public accountant. I was born and raised in Ghana, came to the US when I was 8 years old. And fast forward, I attended the University of Illinois Urbana-Champaign, where I received my bachelor's degree in accounting, as well as my master's degree in accounting. I went on to become a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprise LLC, which is a multinational conglomerate in the finance industry. And what we do is provide a suite of financial services, with the main company, marquee company, being Badu Tax Services. And that's the firm that provides tax preparation, tax planning, and tax representation services to individuals and families, businesses across all 50 states in the US. And we also have clients that are physically based in over 25 countries at the moment. Reason why I'm here today is because I'm very passionate about financial literacy. So we have an organization, a foundation known as the Badu Foundation, where we teach financial literacy to the communities. And lastly, my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. All right. And so let's go into the trust tax return. Basically, today, I'm going to show you a sample of what the trust tax return looks like. So this is the 1041, and emphasis on the one, in that basically this form used to be available to those who were in the 1%, the quote unquote 1%, meaning that your name had to be Elon Musk, Jeff Bezos, Warren Buffett, and the like to be able to use this form. But thanks to Christina and the Seven Ways to Wealth team, everybody now is able to, everyday individuals, just like you and I, are able to use this form as well. This form used to be historically only available to the ultra wealthy, but now we have access to it. So now that we've tapped into that resource, or that resource have become more available to us, we should be probably utilizing them as well, right? So this is not a form for the weak. This is not a form for basically anyone who is not looking to create wealth and looking to basically advance in your abundance, abundance discovery or abundance seeking. And so this is a form that when you've mentally graduated and said, hey, I want to get to the next level, I want to take things to the next step. I want to do things in a way that 1,000+ generations that come after me are going to be positively impacted. So that's the type of language you want to be speaking when you tap into a forum like this. It is truly a powerful strategy, and it is truly a powerful form. All right. So just wanted to share that. So this is the 1041. It's used for not just trust, but it's also used for an estate or estates. So when somebody passes away, they do also turn into a business, believe it or not. And that business is known as an estate. And so we use this form to file the annual tax return of an estate, someone who's passed away. But today our focus is on the trust component. And so by being a trust, you complete the form, the 1041. Now, this form is used for complex trust. And so the type of trust that Christine and the team are, discussing with you are a complex trust, irrevocable trust. So all irrevocable trusts are complex trusts, right? And so a complex trust means that you can basically, number one, you have to file the tax return every year for the trust, even if it has zero income. The only exception would be the ministry trust because churches and religious organizations are exempt from filing taxes in the United States of America. All right. And so basically, this would be a complex trust because it's an irrevocable trust. And when we talk about irrevocable, it means that you can distribute, you can handle your distributions however way you want. You don't have to distribute everything every year like a simple trust would have to do. Right. Simple trust is usually a revocable trust. Right. So today we're talking about irrevocable. So basically with the form, when we're starting off, at the top, very simple. Let's say you form this trust in January 1st, 2025. So you put your dates, your fiscal year. So January 1st, 2025 to December 31st, 2025. All right. Then you want to check the box complex trust in section A because it's an irrevocable. When you hear the word irrevocable, just think of complex trust. They go hand in hand. You put the name of the trust. This is the John Doe Irrevocable Business Trust. So this is your business trust. You're, of course, usually going to have three main trusts, your business trust, your family trust, and then your ministry trust, right? Your charitable trust. You put the tax ID number, which is issued by the IRS, or your EIN number. And then notice how you don't put your name, you put the trustee. Who's your trustee? Your fiduciary. Fiduciary is your trustee. Your trustee is your fiduciary. And so you would put trust company A, right, in this example. The address, right? You would put the trustee's address, very important. So you're not putting your name really anywhere on this form. Basically, you're servicing as a trusted individual of the trust, but you're not necessarily the trustee of the trust. Now, can you be your own trustee of your own trust? Technically speaking, yes. Usually it's a company, right? It's somebody else, an attorney, a law firm, whatever the case may be. That would be the trustee of the trust. All right. And I hope you trust that person, right? No pun intended. And so with that being said, you put the city, state, and then you also would put the zip code. All right. You want to put the date that your trust was created. So January 1st, 2025 in this example, and then a number of K1s. And so if you're the only, or let's say, so usually the beneficiary of your business trust would be your family trust, right? And so if the beneficiary of your business trust is your family trust, then ultimately you would just put 1K1. We have, some structures where you'd be like a 2% owner, you individually, and then your family trust would be 98%. So however way you structured it, let's assume it's 100% owned by the family trust though. Then you would put 1K1 because the K1 is the form that shows what distribution amount is given to this company, like what amount was distributed to this company, the company that owns the trust, basically. Then you would mark initial return because this is your first return for the trust. All right. So this is where it gets a little interesting in that this section, the income section, is a compilation of multiple forms. So to put it simple, basically, you're going to have three trusts: business trust, family trust, ministry trust. All your business affairs should be run through the business trust. And so what you're going to do is, let's say that you have, let's say that you are a real estate agent. Your main hustle is running a real estate agent company, right? It's an active business, your day-to-day hustle. And that's through an LLC, a limited liability company, right? That's owned through an LLC. And so basically with that, you're going to use the form Schedule C. So the way you structure the ownership is that the business trust owns the LLC. Business trust owns the LLC, right? So the member of the LLC, the single member LLC, would be the business trust. All right. And then who's the beneficiary of your business trust? It's usually family trust. Who's the beneficiary of your family trust? Your ministry trust, right? There's so many layers you can put on this, but ultimately you're going to be the ultimate beneficiary of all of this. And so when we fill out the form, we're going to use the Schedule C for your main company, your main hustle. And notice how it goes on this tax return, the 1041 tax return. All right. And so you're going to report the income of the business on the Schedule C, and then the expenses of the business, your write-offs, your suit jackets, your water that you drink to stay hydrated during your meetings, your cell phone, your AirPods that you listen to Zoom meetings on, the trips that you take to Aruba, Bahamas, your food that you eat, the G-Wagon that you bought, right? So all your business expenses would go on the Schedule C component of the 1041. So that's going to report the income and expenses of your main hustle. All right. Then you own rental properties. Let's say you own 3 rental properties. That's owned by another LLC. Each property is owned by its own LLC. All right. But the business trust owns the LLCs, is the beneficiary of the LLC. So what form are you going to use for that? The Schedule E. Schedule E is where we report rental income of each property. Each property will have its own Schedule E form, basically. Then what if you trade stocks? Or let's just say you own some stocks. You own a brokerage account, you get some, you sell, you buy and sell every now and then. And so you're going to use a Schedule D. And then what you're going to have is the business trust is going to be the owner of the account. Notice how you're not the owner of the account, the Robinhood or whatever account you use. It's going to be your business trust that owns it. Then what if you're a farmer? Maybe you own a small farm, you own some chickens, some cows. We actually have some clients that own farms. So we're always, it's always fascinating to see that. And so basically it's not a common thing nowadays, but, if you own a farm, then you have an LLC that owns the farm. And then your LLC, your farm LLC is owned by the business trust. So you're going to fill out a Schedule F. If you sold things, you sold a property, you sold a car, you're going to use the 4797 form, ordinary gain and loss. Who's the ultimate owner? Who owns those assets? It's going to be the business trust, essentially. All right. So you're going to put all of that here. And then let's say you have a bank account in the name of the trust. You should have a bank account in your trust name, and that bank account earns interest. So then you're going to report interest income for the business trust. All right. And so that's all going to be here. You're going to report the income and basically expenses of your respective businesses. And then when we get to the deductions, now you put the individual deductions of the business trust. Well, you have a fiduciary, so you probably need to pay some fiduciary fees, whatever the fiduciary charges. Fees to our firm as a tax firm, a CPA firm, where we do your taxes, your trust tax return, that's going to go here. If you have an attorney, that's going to go here. And then for your ministry trust, any money that you send to your ministry trust is going to go on this line, the charitable deduction line item. All right. Any interest you've paid, maybe you have loans and you pay interest on the loans in the name of the business trust, then you go ahead and report it here. Now, what about your family trust? Your family trust basically is going to have a very, very, very similar tax return. The only difference here is with the family trust is the income amount is going to be the exact same as the expense amount, right? So the only way that I can truly explain what I'm pretty much sharing here is to demonstrate it to you. And I should have an Excel spreadsheet. Please bear with me here. I don't know why it's not popping up in my share. So let me go ahead and share this. Here we go. It was creeping up somewhere. So basically, the goal of the trust is to pay, one of the goals is to pay $0 in income taxes. All right. So this is a scenario here where we have the three trust strategy. You're a real estate agent, you make a decent amount of money, you make $500,000 a year. That's your business trust income. All right. When we compile everything, your Schedule C, your Schedule D, Schedule E, all of that, you make $500,000. And then you have write-offs, expenses of $400,000. So your net business income for the trust is going to be $100,000. That's going to go on line 23 of the form that I showed you previously. We'll go back to that form. So if that's the case, if you left the money there, you're going to pay a tax of 37%, $37,000, right? 37% times 100,000. If you left the money in the business trust. When it comes to taxes, and this is something I was explaining to a client earlier this week, in that when you make money and you leave it there, you get taxed, right? You get taxed. Money loves movement, and it is a true statement when it comes to taxes. Money truly does love movement. It hates sitting in one place. It hates sleeping in a hotel, right? All day, every day. It wants to keep moving around. It wants to get on the road. It wants to buy stuff. All right. Not that you should be splurging your money unnecessarily, but what I'm saying is that that money should get divvied up and invested. So basically, what you want to do is you want to take. So first thing is you want to create a budget for your trust each year. Your business trust, family trust, and your ministry trust. You want to have three budgets. You want to track everything very meticulously. But let's say your business trust has 100,000 profit left at the end of the year, right? When you do your budget, what you would want to do is you want to create a separate budget for your family trust to pay for things like your mortgage, your medical expenses, your kids' tuition, private school tuition. All right. And so the business trust is not the one that's going to pay for those more personal expenses. It's going to be your family trust. So what you want to do is you want to transfer the money. You want to set a budget and transfer the money that you spend in your family trust, your family household expenses, and you want to transfer it into the family trust. And then you pay for all the family expenses that way. All right. So now you're left with a $25,000 that, could be divvied up elsewhere. Now, part of this, between this 500, 400,000 is you own properties, you're buying investments, you bought some stocks and everything. So you have everything going from a business standpoint within your business trust. This is what's left over that can be sent to your family trust. So what you would want to do is transfer that 75,000 to your family trust. And then what's left over is 25,000. If you don't send this 25,000 to your ministry trust, you get taxed at 37%. So what does the wise do? The wise sends that money, donates it to your ministry trust. And that's how you effectively complete the trust strategy, right? Total transfers between family trust and ministry trust, $100,000. All right. And so what does that mean? Your net profit from your business trust, line 23, is really going to end up showing $0. $0. All right. And so what does that tax liability become? It goes from 37% to 0%. And that is how you effectively execute the trust strategy. You do everything business related through your business trust, your write-offs and everything, your business income. Then you transfer the money to your family trust for any household personal expenses. Then whatever's left over, you donate it to your ministry trust. All right. That means you paid zero taxes every single year. Now, do you have to file a tax return for the ministry trust? You do not. You do not, because in the United States of America, land of the free, home of the brave, you know, churches and religious organizations are not obligated, required to file a tax return. So you're going to have two tax returns, really. The business trust tax return that goes on a 1041, and then the family trust tax return that goes on a 1041, same form. And then your deadline is April 15th. And you can file an extension in case anybody hasn't filed taxes for their trust yet. All right. So with that being said, I mean, that's basically everything that I wanted to demonstrate to you today. Wanted to keep it short, keep it pretty brief, keep it concise, and explaining everything that it is that we're doing. In case anybody is looking for a tax professional, I'll be more than happy to be, our firm, Badu Tax Services, will be more than happy to be your tax professional. And so you can feel free. We will have a link in the chat that basically allows you to work with us. It's just a quick, thank you, Ivy, for that. It's just a quick, you know, um, 2 minute, 1 or 2 minute link that just allows us to get to know more about you, what it is that you're looking for, how we can help you. And so I always like to save ample time for Q&A for questions. And so with that, let's open up the floor for any questions. And thank you, Ivy, once again, putting the link in the chat. The link in the chat is a link that ultimately allows you to get to know more about, just us to get to know more about you and then how we can best assist you essentially. All right. So we got questions. Let's go into questions right now. Right now, please go ahead and ask your question, please.
Hi, thank you. Thank you again. I
Absolutely.
just have a question about taxes in states that do not charge a state tax. This
Mhm.
then, what you just showed us, takes care of the federal tax. So
That's
we're
right.
good? Is there any other taxes or things that we should worry about? If I, for example, do a Wyoming or a South Dakota, and there's no state tax, are there like estate taxes or things that I have to worry about?
Um, so short answer is no, right? So now if you file in a state, a state that taxes income, then you do have to file a state trust tax return as well. So this is, yeah, what I just talked about today was more on the federal side. Um, but basically, this is more, yeah, if you file in a state that has no state taxes, then you do not have to file a separate tax return. There is no estate here. Estates are dealing with the decedent, anybody who's passed away, unfortunately. And so, to answer your question, Ray, if the trust was set up, here's a strategy. You may want to set up your trust in the state that has no state income taxes. But if a trust is set up in a state that has no state income taxes, then you do not have to file a tax return in that state. If it does have state income taxes, you do have to file taxes in that state. All right. Does that answer
All
your
right,
question,
thank
Ray?
you. Yes,
No
yes, thank
problem.
you very much.
Yeah, no problem. All right. Let's go, Rudy. You know what? I knew Rudy was going to ask questions, so please go ahead, Rudy.
Hey Jeff, how are you?
Yeah,
Thank you
doing
for the
good. How you doing today,
presentation.
Rudy?
Good,
Yes,
good.
sir.
Thank you. I'm.
Yes, sir.
I know it's been a while, but I'm gonna get it. I'm gonna get it. So my question is, on the beginning, you said there's the name and then there's another name, and I haven't heard anything about putting it. You said put it under the second name that you trust or something like that. Like what? I
Yeah,
haven't heard of that.
that's the fiduciary. Whoever is your fiduciary, you put their information there, right? And so
Okay,
the trustee is the fiduciary.
so like if I'm the trustee of so it'll have the name of the account of the trust on top, and then it'll have my name after that.
Correct, exactly. If you're your own trustee, you put your name in the fiduciary section.
And does that, like, if we're trying to stay private, should we do somebody else's name, like create another entity, or no, or just it's okay?
Yeah. So this is where Christina's advice would come in, but
Okay,
you should not serve as your own trustee. It actually sort of defeats the purpose of the revocable or irrevocable status. So by being an irrevocable trust, you ideally should not serve as your own trustee.
okay. Then I'm gonna have to ask her. I'm a bit lost. Okay, but all right. Well, thank you.
Yeah, I mean, basically, so usually a trustee is a company, right? They have service providers. I know Christina and the team have resources for you that can help
Okay,
explain that further, but you
okay,
just don't want to be your own. You don't want to, your name, you yourself should ideally not be the own trustee of your own trust. Now, can it be? Yes, it can. You do have the
okay,
ability to, but it's usually different than that. It's usually not you as the trustee. You are the ultimate beneficiary of your own trust, but a fiduciary is a third party that basically handles some of the data. It's like an agent, right? Having like an NBA player with an agent. Basically, the fiduciary is the agent of your trust.
Okay. And that
Exactly.
goes for all three trusts, all three of them,
Exactly.
right? Okay.
That's right.
All right. Well, thank you, Jeff.
Yeah, no problem. Absolutely, Rudy.
All right.
Thank you for that.
Okay.
Excuse
Jennifer
me,
asked a
sir,
question. Go ahead.
can I ask? I'm on the same line. I
Real
think that
quick,
a lot of us,
real quick.
yeah,
Sorry,
yeah,
real
I think
quick. So
some
if
of us get confused between grantor and trustee. We know that you should not be the grantor, but you can be the trustee. So that I think probably needs to be clarified. Thank you. I was listening to Rudy's question, and I just thought that he was talking about the grantor rather than the trustee.
Yeah, definitely. Yeah, that's a great question. Yeah, grantor is always the person who's funding the trust, right? The person who's creating the trust. But yeah, the trustee is usually in an irrevocable scenario. It's a different person. All right. Let's go to, so we do have a question in the chat. Then Jennifer put, what states have no state income taxes? And I did put the answer to that in the chat. Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, my state, right, Washington and Wyoming. And so those are the 9 states that do not have a state income tax. All right. Judy, you have your hand raised. Please go ahead. And there you go.
Thank you. I just want to clarify, you mentioned that line 23, that $100,000, if you don't donate it to either a family trust or a faith-based trust, you paid that 37,000 that was holding for that tax. So do you move it to the faith-based trust, correct?
So first you want to move money to your family trust first for any family household expenses. All right.
I understand that part, but you mentioned like that $100,000 that was remaining after the expenses. That goes to line 23, but then you shows 37% is tax. And then that 37,000, where does that go?
Yeah, that would go to the IRS if you did not do proper planning throughout the year.
So
basically.
So if you were to move it, you would move it to the family trust then, or not the faith-based trust?
So you would move, in the example that we went through, you would move 75,000 to your family trust to pay for your family household expenses, because that's how much we set for the family budget. Right. And so, yeah, you would exempt the tax on the 75,000, and then the final, the final show would be to move the remaining money to the ministry trust, the 25,000 to the ministry trust, so that you don't pay any taxes on the,
Okay.
on the
All
entire
right. I'm
strategy.
sorry. I was confused that 37,000, if it's from the 100,000, and if you don't move it, you end up paying 37,000 to the IRS.
Exactly. That's right.
Okay. Got it.
That's
Okay.
right.
Thank you.
Yeah, no problem. Absolutely. And then for clarity, where that 75,000 that you move to your, your family trust, where does that go? It would go on this line here, line 18, through the K1, the schedule K1. Basically, the money would get transferred to the family trust in that way. And then your family trust, that income is going to be listed as a K1 income on line 8, basically. All right. And
Thank you so much.
then your expenses. Yeah, no problem. No problem at all. All right. Let's see here. Let's see. Alexis says, trying to raise hand. Yeah, Alexis, please go ahead. Please go ahead. And there you go. Looks like you're unmuted. Can you hear us okay, Alexis? Yeah, it looks like your mic, you might have to reconnect your audio. You can feel free to type your question in the chat though, Alexis. I'm more than happy to answer it for you. All right, let's go to, let's see, Jen. Jen, you have your hand raised. Please go ahead.
Hi, thank you for your time. I want to make
Absolutely,
sure
no problem.
I understand the flow of money. So if when collecting income on SSN, for example, so now we're talking about an individual person, right? And you're a contractor for said company, right? So they're basically not taking any or minimal, I'll say minimal amount of money out of the income that's generated. You then have that flow into your LLC, complete
Right.
appropriate deductions, expenses, as you showed us, right? Deductions, expenses from the LLC. Then whatever is unable to be deducted and expended, that'll then go to the business trust. And then it goes through the trust flow that we are familiar with, that you just walked through, right? Where you distribute or expend to family trust for family expenses. And then again, whatever's left, you want to donate into your ministry trust to minimize tax liability as much as possible.
That's right.
Am I correct so far? Okay. So when going to our first stop, right, our first income generator, I'll say, which is the individual, the SSN, that income, although how the money flows was just walked through, that income that's generated by that individual, by that SSN, is still tax liable. Is that correct?
I'm sorry, what type of income?
It would be individual income generated. So the income was collected and generated by an SSN, by the individual.
Yeah, like what type? So there's tons of income types. If you don't mind, just give me an example.
So a contractor. So let's say that I don't know the form right off the top of my head.
Yeah, the 1099 form.
1099 as a contractor. Yes, thank you.
Yeah,
so
so ideally what you want to do is, and this is where this strategy, like when you're doing this trust strategy, you want to be extremely meticulous, right? This is very cross your T's, dot your I's. One little mistake can cost you greatly. And so ideally that 1099, you should have sent a W-9 form that has your LLC's name on it, not your personal name, right? So basically nothing is done in your personal name anymore outside of maybe a W-2. A W-2 would be the only example of something in your personal name. But everything, your business income, business expenses, is going to ultimately operate through the trust. So remember, the trust owns the LLC, right? And so what you would want to do is give a W-9 form. W-9 tells a vendor or a customer that, hey, this is the person you should be paying. This is their tax ID number. This is their name. Don't pay me, right? Pay my company. And so that's how you would go about it, is you would ensure that, and you can triple check this with the vendor or the customer, that they have the right information. They don't have your personal information on file. They have your company's information on file. And then they send you a 1099 at the end of the year in your company's name.
Got it. Got it. Thank you so much for that clarification. I appreciate it. Can I add?
Yeah, no problem.
One more question in there? It's more of a clarification. So I want to say it was Rudy who asked, right, where we, the trustee, are the fiduciary of the trust. And ideally, most of us want to keep our name out of, IRS forms and et cetera.
That's right.
I do want to clarify that you can have multiple trustees that have fiduciary responsibilities, right? So
short answer is basically there's usually one trustee of a trust. Now basically, can it be an entire organization? Yes, it can be an organization of 1,000 people. That's possible. But usually when you have a trust, it has one trustee, one person, one person who's the CEO of the trust, basically.
So maybe that's a question for Christina, right? Because based off of what we've learned from Christina, we can have multiple trustees as our board. Ideally, actually, the ideal structure would be to at least have your trustee and your secretary. And I forgot what the third one is, but the recommendation is to have a minimum of 2, which is your trustee and your secretary. And you can have more than one with fiduciary responsibilities that you can list on the IRS tax form. So I'll pose that to Christine just to confirm. I 100% get what you're saying, but I also understand where Rudy's going with it as well.
Yeah, definitely. So I appreciate that. I think, well, let's let's hear it. Christina, go ahead, please.
He's so funny.
Hi, Christina.
Hi. I do not want to interrupt Jeff's segment. I do want to say that with a traditional trust structure, you can have multiple grantors and multiple trustees. That's all I have to say. I'm going to let Jeff resume because his time is limited.
Absolutely. Thanks for that clarification, Christina. And then just so for the whole room, can you be your own trustee, Christina? Can everybody be their own trustee?
So it depends on the type of trust and it depends on how the trust is structured.
Absolutely. Absolutely. Thank you for that, Christina. And so, yeah, basically what it sounds like is you can, but it depends. And so, I would say when it comes to the item of the trustee, my thing is all about the taxes. I would say let's definitely not get hung up on the trustee component. That's something, whatever Christina and the team has advised you on, please lean on that expertise, because the thing is, when we talk about a trust, it's an organization. It's not one person, it's not two people, it's an entire ecosystem, right? Who's the ultimate person that's going to control the trust? Yeah, of course, it's you, the person who formed the trust. But you want to operate like a business. You do have a board of directors, for example, with Apple. Apple has a board, and so that board helps make decisions. Now, is probably the CEO going to have more of a say than anybody else? Probably. I mean, it just makes sense. And so, yeah, with this whole topic about the trustee, I would say please lean on the expertise of Christina specifically. That's more on a legal, basically that's more on the trust structure side of things. My thing is all about the taxes, how the money flows, what tax rate do you pay? How does the family trust connect with the business trust and the ministry trust connect with the business trust, that sort of thing. And so, yeah, I would say when it comes to the trustee, I wouldn't get too hung up on that part. Whatever Christina and the team have advised you, and there's a specific recommendation that I know the team has given you as to who the trustee should be, I would follow that exact advice step by step, basically. But to answer the questions, can you be your own trustee? Yes, it sounds like you can. Can you have multiple fiduciaries in a trust? It sounds like you can, right? And so I would definitely lean on that expertise. So I definitely wanted to clarify that as well.
Thank you, Jeff. Thank you, Christina.
Absolutely. Yeah, thank you, Jen. Thank you, Christina, for chiming in on that. We got Mona. Mona, please go ahead and ask your question.
Hello, how are you doing?
Yeah, doing good, Mona.
I got 2 quick questions. So your company provides service for trust and profitable businesses?
Yes, we do all taxes for all types of entities, all types of individuals. That's right.
So do your company communicate through email only or phone and email?
All means, right? Phone, email. We do have a phone number that you can call. Email. We also have a secure portal system where you can send us messages through a chat. You can download our app. It's not our, we're not the ones that created the app, but it's just we have a provider that has an app that you can use to chat with us. And then also, text. We actually have in the portal, there's also a way to text, to send us text messages as well.
Okay, awesome. One more last question. Is it best to get with you when we finish building our trust or before?
Yesterday.
Okay,
yesterday.
awesome.
No
Okay,
problem.
thank you. You have a blessed one.
Absolutely. Thank you too,
That
Mom.
was a great
Thanks so much.
response. Yesterday.
Hey man, to that's my new response for everything now.
I'm gonna borrow that. When was
There
the
you
best
go.
time to set up a trust? Yesterday.
Yesterday. Yep. There you go. Love it, love it. Absolutely. Beautiful Friday. All right, go ahead, Rudy, please.
Just quick question. Have you said that it used to be available mainly just to like rich people, right? So were you doing a lot of 1041s before teaming up with Christina, or I'm just wondering because I remember when I first learned about this, a friend of mine is a CPA, and I asked him, like he had no idea about a 1041. He's like, "Oh yeah, I learned about that when I was in college, but he goes, I have no idea."
Yeah, it's a great question. I would say, and it's very sad to say this, but less than 1% of accountants, CPAs have probably actually worked on a trust tax return before. It's a very
Wow.
uncommon area. It's a
Okay.
very it's the most unique type of structure there is on the planet. Once you get here, I
Yeah.
mean, there is no really, I mean, they say it's only onward or upward. You can only go up.
Yeah.
But once you've reached trust tax level, that means you've mastered the game of taxes for sure.
So you've mastered
Absolutely.
it.
Yes, indeed. Appreciate that, Rudy.
Nice. Thank you.
Absolutely. In other words, it doesn't really get more complex than the trust. I mean, can you do it? Yeah, absolutely. Can you have success? Absolutely. But this is one of those areas where you want to be meticulous. All right. Christina, go ahead, please.
Oh, thank you. So Jeff would not be here if he did not master it. And what he's saying is absolutely true. Do you know how many CPAs that I've talked to and they're like, I don't even know how to do this form. And I was in the beginning, I was so frustrated. I was like, why is it so hard? So he's telling the truth. Like you have no clue. So when I say he's the best in the business, and he has even mentored other individuals that are like the best in the business. So that's what he produces.
Yeah, appreciate that. Absolutely. Thank you for that.
Listen,
Christina.
I had to convince him. I'm like, come on, Jeff, please. The people need you. Jeff is like, I'm like all over. Like I'm on stages, I'm this, I'm that. I'm like, Jeff, if you don't come to the Wealthy Trustee Workshop, we're gonna have problems. Okay. Sometimes, unfortunately, I have to threaten our educators. I have to be like, listen, like I'm gonna start pulling strings here because
Right.
yes, so Jeff is one of the individuals that I had to I had to sweet talk him like, please, our people need this. And so finally, he's here educating and
Absolutely.
pouring into you. Okay. So listen, what happens behind the scenes, you have no clue. Okay. I have to really
Exactly.
I'm telling you to bring the best here to you guys. So yes, he would not be here. Trust me.
Absolutely. Amen to that. In the name of trust. Thank you for that, Christina.
Hey.
Appreciate that. And yeah, no, definitely always means a lot there. And yes, you some of the names that you see on social media. So me personally, I am on social media, but I'm not too much on there. I've never really been a quote unquote social media person. Yes, I have a presence and everything like that. But some of the folks that you do see out there, yes, they actually started with our firm, Badu Tax Services. We trained them. They've gotten to a certain level, and some of them we still work with. Some, we're a bit distant, but yeah, what Christina's mentioning is correct in that we have trained some of the professionals that you see out there now. Some of the big names. Definitely don't want to mention any names here, right, for the sake of privacy and all that good stuff. But
We
what
have to have our
Christina's sharing
own
is very true.
secrets, Jeff. If you tell the community everything, then what? Like, hello.
Exactly.
Can we have our
That
own
is true.
inside secrets? The community don't have to know everything, okay?
Exactly. That is true. You got to have that secret sauce.
Yeah.
Absolutely. Absolutely. Thanks for that, Christina. Now, she has a question. Let's say you want to lease a G-Wagon. because you don't want to get any more cars in your
Alexis
personal
is
name. How do you
big
go about?
time.
Yeah, right. There you go. Big time. Okay. G-Wagon Alexis. I love it. I
Right.
love it for sure.
5,000 pounds, right?
Exactly. Exactly. And so how do you go about that? According to my expertise, I would say, yeah, this is something that be more of a Christina question, but let me just share my perspective in that you have your LLC, which owns your business. I mean, your LLC, which does your day-to-day business operations. So you would buy it in the name of the LLC, right? So the LLC's name, and then your trust owns the LLC pretty much. So as far as who the lease is in, Alexis, excuse me, it would be in the name of your LLC. All right. Yes, indeed. Does that answer your question, Alexis? Did you have another one? And you are muted. All right. Let's go ahead and click that unmute. Okay. Yeah, it looks like we still can't hear you, Alexis. Yes, indeed. All right. Yeah, please feel free to type in the chat. Alexis, Rudy says, I want to be like Jeff and Christina when I grow up. I appreciate that. Thank you for that, Rudy. Appreciate that indeed. And then Derek, shout out to Derek. He says,
I already
awesome.
have the gray hair, so you don't want to be like me, okay?
Man, oh man, I love it. Anybody else with any other questions? Great questions so far today. Great questions indeed. Love the engagement, love the dialogue. And yeah, one thing about me is I like to keep my content, workshops, presentations pretty short because I know there's usually questions. I like to get pretty precise to the point, and still ensuring that you understand everything that we're presenting. So you'll see me using Excel spreadsheets, sometimes a whiteboard. I've done those sort of things before, but nonetheless, anybody have anything they need clarity on, I'm more than happy to clarify it. And then in the chat, if you feel you want to take this offline, maybe this is something you feel should be one-on-one, you can feel free, hit that link, fill out the questionnaire, just takes 1 to 2 minutes. And then from there, our team will connect with you, set up a meeting so that we can go over how we can work together and any questions you have. All right, let's go ahead, Ms. Rhonda, please.
Okay, can you hear me now?
Yes, we can hear you. Mm-hmm.
Okay. So my question is, I understand that there will be 2 tax returns done for the business trust and then the LLC. That's correct?
Mm-hmm.
So you would
That is correct.
need
The business trust and the family. So just to clarify, there's the business trust and then there's the family trust. The business trust owns the LLC. The LLC's tax return goes on the business trust.
as Schedule C.
Exactly. Schedule C. That's right.
Okay,
That's
okay.
right.
So I'm paying you $4,000 to do the business trust return, and I'm paying you $9,000 to do the LLC tax return.
I mean, it's so basically, if you're talking specific in that, the way that our firm works is that it's, we have pretty much, so for example, we're having a file, let's say your business trust owns 5 different businesses, right? Owns a real estate agency, owns rental property, it owns a farm, it owns stock trading business, and then it sells cars on occasion, for example, right? 5 LLCs, 5 businesses. And so our fee is always going to be based on the complexity of the overarching business. Your business trust is the holding company, pretty much.
Right.
So that holding company is going to have different levels of complexity. Some people, it's just one business they own, just easy peasy, right? And so for that, that's going to have its own fee structure. But if we're talking about someone that owns 5 businesses, then the fee is going to range. It's going to vary based on the number of businesses, number of revenue. Our pricing is actually based off revenue.
Okay.
That's where we gauge our pricing. That's just what we felt makes the most sense. So that's how our structure usually works. But we always meet with you one-on-one. We get to understand your wants, needs, and desires first, right? Before we ever set a price or proposal, anything like that.
Okay, that sounds fair. Okay, that
Absolutely.
answers my question. Thank you.
Sounds good. Yeah, thank you, Ms. Rhonda, for sure. Yes, indeed. All right, right now has a question: family trust beneficiary, business trust, ministry trust beneficiary, a family trust. So I would say that that is a viable structure, right? That is a good structure. However, when we talk about the ministry trust, um, it's so the thing about a ministry trust is that, yeah, it has a fiduciary, it has trustees, it has all that good stuff. But it is a slightly different structure than your family trust and the business trust. And so I would say you just want to make sure that, usually something like a ministry, you have the board of directors, right? That sort of thing. And so when we talk about the beneficiary of the family trust, yeah, you can make the ministry's trust the beneficiary of your family trust. So that's going to be more of a Christina and the team question, right? That's when we get into asset protection and laws and all that. My specialty is regarding the taxes, right? We'll look at your trust structure and please ensure it's set up correctly, because if not, we're going to send you back to Christina, right? We see everything. You give us the information. We complete the forms for you. Now, if we see something that maybe looks off, then that's when we'll reach out to you. And then if you give us the authorization to reach out to Christina as well, then we'll make sure that everything is buttoned up. But I know if you're working with Christina and you have that level of service, you definitely are set up correctly. So just wanted to point that out as well. All right. Thank you for that, right now. And then, so yeah, LG, that's going to be a Christina question, but the name that goes on line 2 is the trustee. Whoever is your trustee, whoever you have in your trust documents. And remember, your trust documents is going to have some specific set of information. We're going to look at your trust agreement, your trust documents, and we're going to pull the name of the individual or the company that you put on the paper as your trustee. That's what goes on line 2 ultimately. All right. So if it's your name, then we put your name on that line. If it's a company, we put the company's name on the line. If it's, your law firm, attorney, whatever the case may be, whoever you have put in your trust agreement. And when it comes to trust, it's all about trust. It's all about agreements. And so we're going to put whoever it is that you have trusted to be your trustee on the tax return as well. And God forbid we put the wrong person, please let us know that so that we can fix it. And so just something to keep in mind. All right. Any other questions? Great questions so far. All right. And then going back to LG's example, she says it's me. So yeah, if you are the trustee of your trust, then we're going to put your name on that line too. All right. Real simple. All right. Any other questions, please? Great questions so far today, man. This has been a very good, very engaging discussion. Anybody have any other questions? And please don't, if you haven't already, please don't forget to fill out that link in the chat. And so, anybody that's looking to work together, we can definitely certainly help you for sure. All right, Jennifer says, recap. So for each LLC, do you receive the money in and then pay it into the business trust to pay out all of the business expenses? It all stays in the LLC, to keep it short. The business trust is a holding company, right? It's a holding company of the LLC. And so when you file your tax return, you're using the Schedule C to report the income and expenses of the LLC. But where does that information go? It goes on a holding company's tax return, a 1041. And so money in goes into LLC, money out comes out of the LLC. And then any distributions, any money that's left over, then that stays in the business trust bank account. You transfer it from the LLC's bank account to the business trust bank account. All right. Great question, Jennifer. Let's do last call for questions. Anybody have any, one last question? Anybody have any questions, please? All right. Questions going once? Going twice? All right, Rudy. The last shall be first.
Okay,
the first shall be last. Please go ahead.
Yes. So just really quick, so we don't get audited by the ministry trust as long as it's not more than 60% of our total made. Am I correct? Of the business. going into the ministry, that like we should be okay, right? Going into
And when you say an
the
IRS
ministry.
audit, is it the IRS that would audit, or is it a different department?
Well, like when we do our taxes per se, right? Or who would audit us, like on the 1041?
Yeah. So the thing is, you're not filing a tax return for the ministry trust, right?
No, correct. But what I'm saying is, let's say how you had your description of 500,000 to 100 to 75, and then the 25 got put into the ministry, right?
Yep.
So as long as that 25,000 wasn't more than, let's say, 300,000, they won't flag it to try to check us out. You know what I mean?
You might be referring to a state audit where some charities, some charitable organizations have to be, in order to remain in business, you have to go through an audit, basically. Not an IRS audit, it's a financial audit. So that applies to some charities. So I would definitely check with your state to see what their legal requirements are there. But from an IRS standpoint, no tax return, no audit, basically, because there's nothing to audit because you literally haven't submitted a return. Now, can they choose to, verify your books and records? Yes, they can. So I think what you're more so alluding to, Rudy, is the state audit, the audit that's at the state level that requires you to hire an audit firm to come and audit your books of your charitable organization.
No. Outside of the charity, what I'm saying is, like, in order, because I can't just get the 500,000 and throw it into the ministry, correct? Like that, and say, I gave it all to charity.
Yeah, that would be a very impossible scenario. I would say that.
That's what I mean, right? So is there a percentage of how much money can go from?
No percentage. Whatever you transfer,
Really?
you report that you transfer. You if they ask, you show the proof of the transfer, right? You always want to have that. And then Christine and the team have a receipt template that you can use to show how much you donated to your ministry trust. So yes, you want to be very meticulous about that part. If you donated $10, it's $10 you report, right? And so there is no percentage or any of that. It's whatever you donated is what you write off. Or what.
So if I made $500,000,
taxes.
If I made $500,000 and I want to put it all into the ministry, the government's okay with that?
They will probably ask you a question of, okay, you made $1 million and you're donating all of it. I mean, what about your business expenses? Like, what did you use to pay that?
Yeah. Okay.
Right.
Okay.
Exactly.
Okay.
So a tax return you do want to make sure it makes sense, right? Because if it doesn't, it's like, okay, well, yeah. So basically, in that regard, just because your ministry trust doesn't have to file a tax return, guess who has to file a tax return still? The business trust that shows the amount of donations on there.
Okay.
Exactly.
All right.
So they can always pick that return if they needed to, if they wanted to.
Yeah. Yeah.
All right.
Okay. And that's what I was asking. Thank you.
Yeah, no problem, Rudy. Let's go to Chris. Last question will be Chris. Chris, please go ahead. It's like Chris has you. You have your hand raised, Chris. Go ahead.
Hey, can you hear me?
Yes, we can hear you.
Hello, sir. How's everything? Thank you for your
everything's
time.
good, Chris. Yes, sir.
Awesome. Sorry, I was kind of taking care, so I'm not sure if you answered this question already, but just say, I sold my LLC to my trust, and then, like, I guess the business that I'm in is almost like it's kind of similar to, like, just kind of giving advice and things like that. So just say the payment that I was taking in, could I consider that like a donation, not actually a payment? And
payment taken in where? You mind clarifying your question, please?
So just say my services for an hour. Just say it was a consultation, right? And I'm giving someone advice about something, right? Just say I'm a therapist, and basically, I'm getting paid by the hour, and they book me for an hour, and say it's $500, and just say, can I have it set up where the payment is a donation and not an actual payment? I don't know if that makes sense.
Short answer is no. You would receive that as income first in your business trust, and then you just donate whatever, whatever's left over into your ministry trust. Keep it simple that way. Right. But basically, yeah, you can't necessarily, if somebody's paying you for a service, then ultimately, can you donate that money after it's paid to you? Yeah, absolutely. That's how you would do it. But to say, hey, I received the money and then I'm going to call it a donation, unless you have a charitable organization that provides complimentary services to the customers or the types of people that's doing business with you, then that would be the only way. But I would say, Chris, keep it extremely simple. The money comes first into your LLC, which is owned by your business trust. You spend some of the money, right? You got to buy, expenses and all that stuff. And then whatever's left over after you've spent all your money, you handle your family affairs and all that, then you transfer the difference to the ministry trust. All right. Does that
Great
make sense, Chris?
information. But
Yes, sir.
what if I tied the LLC to my ministry trust?
You would
And
not want
could
to
I
do that.
do it as donation like that, or is it doesn't matter? It's the same thing.
Just don't do it. Just don't do it.
All right.
Yeah, just keep everything separate. Ministry trust has its own bank account. Family trust has its own bank account. Business trust has its own bank account. Three separate trusts. They function differently. They work in tandem. They do work with each other, but money coming in pot A should stay in pot A. And then you can transfer pot A to pot B, right, to handle pot B's items. And then pot C, which is your ministry trust, you transfer the money there and it handles the affairs of the ministry trust. So keep everything separate books and records, separate bank accounts, separate everything. That's how you ultimately do it the right way.
Got you.
Okay.
Thank you, my brother, man. Take care of yourself.
Absolutely. You too, Chris. And then right now it says, so could you donate a piece of real estate to your trust? Absolutely. Yeah, you can donate anything to a trust. I mean, a car, a house, a chair, anything. So that's completely up to you, whatever it is that you want to accept as a donation. All right. So appreciate everybody's time today. I know I'm up on time. Great questions so far today. Hope you're able to, basically click that link, right? Get some more information. It definitely sounds like a lot of the folks who need to be working together one-on-one. So this is definitely great information, great questions, indeed, and appreciate everybody's time. Let me pass it back to Christina. All right.
Thank you so much. Thank you, Jeff. I appreciate you being one of the most valuable educators that we have here in this program. I know that you provided a lot of clarity today. I can just hear by the quality of questions and how people are structured and how complex it is. So I will tell anyone and everyone on the call, go ahead and book a call with Jeff and his team so that they're able to look at your unique individual structure. Some of you guys have LLCs, S Corps, C Corps, all kind of stuff. And so you want them to be able to look at it on a microscope and go through it with a fine-tooth comb. Okay, that's what they're here for. And so it's the most valuable thing for you to do. So thank you, Jeff. Thank you for your dedication to the program. Thank you for your team and everything that they do for our community members.
Absolutely. My pleasure. Thank you, Christina. Always a pleasure. Thank you for inviting me to speak to your group. You definitely got a great group. And, hope everybody takes action. Hope you have an amazing rest of the Friday and the weekend. And we'll most certainly be in touch. Happy tax season, everyone. All right. Thank you.
Happy tax season.
Absolutely. Y'all take care now. Thank you.
You too, Jeff. Bye.
Thank
TGIF.
you. Thank you.
Yeah. So, guys, you know how you see like on the internet and on the TV and they're like, don't try this at home. Like I personally would not recommend that you try to do your own trust taxes at home. Like I have never, ever, ever done my own trust taxes. I've never done my taxes. I tried when I was 18 years old, but that was, I had like a little tiny paycheck. But right now at this level and the way that I hear you guys asking questions about the the types of entities, the structure, the income, you guys need proper guidance, especially in the beginning, because they are so thorough. They will hold your hand through the entire process. So don't forget to go ahead and at least book a call just to get clarity. So without further ado, I want to go ahead and open up the floor for Q&A, you guys. So let me review what we talked about earlier today. So earlier today, I educated you guys on first how to obtain your EIN for your family trust. That's in order for you to get your bank account for your family trust, okay? So you guys are talking about moving money around. The last thing that you want to do is commingle funds. So every single entity needs its own bank account, and the way that you're going to be able to obtain a bank account for your trust organization is by getting an EIN number. You need that 9-digit number, okay? So the second thing is we went through the asset inventory list so that you can take an inventory of your assets so that you know which assets qualify to go inside of the trust and which assets don't. So unfortunately, every single asset does not qualify, as you guys learned today. And so you want to be able to use that as a living document within your trust so that you can just, keep an inventory of everything that you have. The next thing is that we filled out the quitclaim deed so that you guys can deed over your real property into the trust. Then we went over the bill of sale so that you guys can move your vehicles into the trust. And then we went over the business purchase agreement and the amendments to the articles so that you guys can move your LLCs and your corporations into the trust. So without further ado, I want to be able to answer any and all questions that you guys might have based off of the information that we went over today. So the first hand that I see is Chris. Hey, Chris. You're still on mute if you're talking. I'm not sure if you're talking, Chris.
Oh, hold on one second. Hold on one second. Hello?
Hello.
I wasn't on mute, you said?
You was on mute. We didn't hear you. Do you want
Oh,
to
okay,
start
okay.
over?
Sorry. I just unmuted myself. Sorry. How's everything, Christina?
Everything is wonderful. How are
I'm glad
you?
to I'm glad to hear that. I'm awesome. I'm awesome.
Okay,
Um,
great.
I had a question about a quick claim. Well, the situation is based, I'm trying to help my mother out, right? So her and my brother are on a deed, right, to her house, but she wants to get him off. And I set up a trust for her. So how would I structure the quick claim deed? Do I put her name and his name and then have it notarized to transfer the house into the trust because she's going to be the
Correct.
trustee, right? Now, I
Correct.
guess the real question is, like, I guess they'll go to the notary together.
Yes.
When they take that quick claim deed after it's notarized, do they both have to go to the county clerk's office together to
No.
do it? Or can she
No.
just take it?
Yes. Correct.
That's it? Thank you. That was
It's not hard, trust me.
that's all I need. I just wanted to make sure because they live kind of far away from each other, so I didn't want her to go all the way where he lives, get things signed, and then find out that she needed to go to her county where the house is at to get everything transferred over. So that's awesome news.
All right.
Um,
Sounds
thank
good,
you so
Chris.
much, Christina.
You're
Appreciate you
welcome.
always. And
Yay.
enjoy your weekend.
Thank you. I will.
Take care of yourself.
Thank you. You have a great weekend as well, Chris. All right. Next we have Tony. Hey, Tony.
Hey, Christina, how are you?
I am doing well.
Okay, so using the CPA and everything like this, let me ask you, what accounting software do you use in-house and everything to keep everything together with all of
Yeah.
these trusts and the bank accounts and stuff like that?
Yeah, I use QuickBooks.
Okay, great. That's all.
All right.
Well, that's all I got right now. So I'll
Okay.
let you get to the next person and everything. So I know how to try to keep everything in order.
Sounds good.
Thank you so much. Have a great
You're,
weekend.
you're welcome, Tony. You have a great weekend too. Next we have Latanya. Hey, Latanya, you're still on mute. Okay, we'll wait.
There I am finally. Can you do a really, thank you so much for everything that you do. Thank you. Can you do a real quick overview on, I have a house, a car, and a business and stocks. I just want a real quick, this goes here, this goes here, this goes here.
Okay,
As far as the trust.
okay, that's great. So let's start with the house. So if the house is your primary residence, it goes into the family trust. Your stocks usually is personal. It'll go into your family trust unless you want to label it as a business investment. Your business is going to the business trust, and then your vehicle, you're going to create a separate trust for it. So it will go into a separate family trust. So don't put it into the same family trust that you have your primary residence.
Thank you so much. I appreciate it.
You're welcome. Thank you for asking that good question. Next, we have Rudy.
Hello, hello.
How are you?
Let me say sorry if I made you look bad. I'm a bit lost with what he said on the trust. When you look at the 1041, it has the name of the trust, and then on the bottom he had the name of the trustee, and he said it was another corporation. I don't think I've heard that before, so I'm just confused.
Okay, no problem.
That way we don't have our name per se.
Yeah, so remember, I've been saying all week that the grantor, the trustee, and the beneficiaries can be entities or natural people. So they can be either or. So you have to decide if you want it to be an entity or a natural person. So he gave you the example as if it's an entity, okay? So a lot of people would go for that option. If they don't want to have their personal name, then they can list an LLC. So I did mention this. So they can list the in LLC, not particularly your LLC, right? It's going to be a LLC, and you can list it as a grantor, a trustee, or a beneficiary. Okay, so the capacity for those positions, they're still going to operate in that capacity. So for example, if you list an LLC as the grantor still has irrevocability. So that LLC is still going to have no power and no control. If you list an LLC as the trustee, then that LLC is the fiduciary. So they have all of the power and all of the control. They're going to be administering and managing the trust. And the same thing goes for the beneficiary. So if you list an LLC, or as what we do, another trust, right? An entity as the beneficiary, they're going to be able to benefit from the trust. They're going to be able to receive distributions and gifts from the trust and ultimately receive assets from the trust. So our CPA gave you an example as if an entity, right? A trust company, that's why he put trust company, as an entity that is going to serve as the fiduciary. Now, traditionally, you have an irrevocable trust. And traditionally, the way that an irrevocable trust is structured is you will be the grantor, and then you would choose another company to be the trustee. So we don't structure it that way. So we structure it the other way, to where we are the trustees and we choose a company or entity to be the grantor. Okay.
Okay.
Does that
Okay.
does that make any sense?
So in the taxes we would have our business trust and then our name right under it, right? That's
Yes,
okay.
correct. Yes, correct.
Okay. Unless I'm like trying to completely disappear, right?
Right. So
Per se?
if you're not the trustee, then whoever the trustee is, you put their name. If it's a company, then you put the company's name.
Okay.
Okay.
I thought he was doing like something like I'm like, oh, I haven't heard of this, but okay.
No,
And then
we've been talking about it. So I always tell you what your options are. So
Yeah.
those are options. I did tell you that. I didn't show you that as an example though, but
Yeah.
I did tell
Maybe
you
that's fine.
but it's inside of your trust indenture, okay? So whenever you have these types of questions where you're like, hey, I'm unclear, you always run to the trust. So for example, when our CPA said, oh, typically there's only one trustee for a trust, right? It's like, no, no, no. What
Yeah.
does the trust say? What does the trust say? Does the trust
Yeah.
say you're restricted to only one? No. The trust
Yeah.
says two, maximum three, right?
Yeah. Yeah.
So, you can have an unlimited amount of grantors, an unlimited amount of trustees, an unlimited amount of beneficiaries, right? So
As long as
you
it's specified, right,
in the
in the
trust,
indenture,
in the
in the trust.
trust, yeah. I
Yeah.
have seen trusts to where there's 20 trustees, and I'm like, how are they doing this? Yes,
Wow. Wow.
yes.
Okay. Okay.
So it depends on how big or small your organization is. That's why the fiduciaries have the power to be able to amend. In 10 years, your organization might be huge and you're like, man, I'm a one-man show. But my trust says that that there's only one trustee. I have to now amend my indenture to increase the number of trustees. I need 5 other people here,
I see.
right?
I see.
But
Okay. Nice.
the next thing that I want to address is best practice is for you to have 2 trustees, and that is to avoid self-dealing. Okay. So self-dealing is when you are the fiduciary, right? And so you as the fiduciary, you need to be operating that trust for the beneficiaries, not for yourself. Do you
Yeah.
know that?
Yeah. Yes.
Okay.
Yeah.
All right.
When you
So
were reading, it's about them first before we give to anybody or whatever.
exactly.
Yeah.
So you're going to be making a big mistake if you're operating it for selfish gains. And so that's when
Yeah.
you get accused of self-dealing. Okay. So now it's very hard for you to get accused of self-dealing if you have a co-trustee because there's 2 of you, right? That's
Yeah. Yeah.
one. There's 2 fiduciaries, not just one. Okay.
Yeah.
Then the next component is that you have an entire board of trustees that is doing what? They are the governing body. So they
Yeah.
get to advise you. So they're
Yeah.
operating in an advisory capacity. So how is it that I'm self-dealing? I have an entire board. So
Yeah.
that's
That
why
keeps
we
you in check.
have those important components in there.
Yes.
Yeah.
Nice. And then I believe before you had said it's best practice to have 3 in the ministry, or no? Or is it still 2?
So that's a great question. So we're talking about 2 different things here. Okay.
Yes.
So
Yes.
trustees and board of trustees are 2 different things. Trustees
Oh,
are
okay. Okay.
Trustees are fiduciaries. Your board of trustees are members. Now, automatically, your fiduciaries are a part of the board, automatically. Okay. But now you have other board members. Okay. So let's just say that you're operating in best practice. You have 2 trustees. Okay. They're automatically a part of the board. And then if it whatever it spells out in your indenture. So I'm just going to say best practices for you to have three board members, right? So you have 3 board members, but automatically 2 of them are fiduciaries because you have 2 trustees. Okay. So now you have 1 other board member, and now your board of trustees collectively consist of 2 trustees and 1 executive secretary.
Nice. And that can be for all 3. For all 3
Correct.
trusts. Okay.
Correct.
Nice. Okay.
Correct. So your ministry trust says 3 board members plus plus 1 trustee. So it's 3 outside.
Okay. So 4. Okay.
Yes.
Okay.
But you can change that though. So if you want to reduce it, you can. Just know that, it's amendable. But the minimum is you and 1 other person. But best practice is for you to have an odd number, 3 to 5, anywhere around there.
Okay. Nice. We didn't in this class, you didn't talk about the insurance. Do Do you still have that guy doing it?
Yeah, we're gonna have a separate master class on insurance. So it's going, I don't know when it's gonna be, but it's gonna be very soon. Just give me like a week or two and we're gonna
Okay.
get it scheduled for the entire community. So it should be, um, I'm not sure. I don't know when the
Okay.
master class is, but it's coming.
Okay.
It's coming soon to a theater near you.
Okay, because he never reached out. But that's okay. Just since I'm doing this, might as well, because I got to do the trust so I can put the insurance in
Yeah,
it.
so everyone who filled out the form, we're going to have a session for you guys, okay? So
And then
it's
I just
gonna
got
be,
to say this. Oh,
yeah, it's gonna, so
something.
the initial part of onboarding you for the life insurance is gonna be done collectively, and then you guys are gonna branch off. So it's kind of like the workshop, okay?
Okay, nice. And then something that was just mind blowing when he talked about the money is movement. And if you don't move your money, they're going to take it, which reminded me of the parable of the talents and the guy who stuck it in the ground. And he's like, hey, you evil, he called him all this and he took it from him. And then guess what? He gave it to the one with the 10 talents.
Yeah.
So that's what the government is doing. They're like, oh, you don't want to move your money? Let me take it. Man, I was like, wow.
Yeah.
Okay.
See, that's why it's called currency for a reason. It's a current, like a water current. It needs to move.
Yep.
It
Wow.
needs to move. Yes.
Okay.
Absolutely.
Well, thank you. Thank you for
Yeah.
everything.
Hey, you're welcome, Rudy. All right. Next we have Alexis. Hey, Alexis, how are you? Alexis, are you still available? Oh, one moment. All right. Alexis, are you available? I don't see her anymore. Let me see if she's still here. Alexis, do you still have a question? I cannot hear you. But I see that yeah, I see your mic is on, but I cannot hear you. Are you talking? Yeah, I cannot hear you. You wanna log out and log back in? Okay, I'll take one question and then when you log back in, I will circle back with you. Okay, let's see who's next. We have Joy. Hi, Joy.
Can you hear me?
Yes.
Okay, great. I have two questions pertaining to the business. I did notice that when you showed like how the business trust had was controlling other LLCs, I noticed that the businesses they were the authorized members and not the manager. Is there a reason? Is it better to be an authorized member versus the manager?
So you can choose either or. I mean, though the authorized member or the manager, they both still have control over the entity. It's just the authorized member has ownership interest and the manager is a manager.
Gotcha.
Yeah.
Oh, so okay. And also, one more thing. And also, if there are business partners for a business, I think it was mentioned that each business partner should have their own trust versus a business trust versus have versus them being a part of the same business trust. Did I misunderstand that?
So you did not. Now you can go in either direction. Okay. So for example, the way that you can do it is you can set up one business trust and have both partners be co-trustees, and then they can list their own family trust as the beneficiary. That's one way of doing it. And you'll just, it's a seamless process. If you want a second degree of separation, then you would have your business trust be a 50% owner, and you'll have their business trust be a 50% owner. So that's the only difference. So obviously, if you set up one business trust, then that one business trust is 100% owner, and both of you guys control it as co-trustees.
I mean, is there a particular reason why someone would do two? Is it because they just want to keep things more separate?
Yes, to keep
Or
it separate. Yes, to keep it separate.
I guess so that would be more like strategic. Like say someone, I guess I'm trying to get an understanding. So if someone wants to sell like their part of the business, they wouldn't have to like what would be the benefit of that outside of keeping it just separate just because?
So it's separation of the ownership. So it's this clear distinction of 50% ownership versus, hey, I control one entity. I have control over one entity, and that one entity has 100%. So you're not clearly defining that you have 50% ownership. So it's in the ownership.
Gotcha. All right.
Yeah.
Well, thank you so much.
You're welcome, Joy. All right, next we have Ray. Hey, Ray.
Hey, just a quick question about structure again. I know I've asked this before. The family trust is beneficiary of the business trust,
Correct.
and the ministry trust is what? The beneficiary.
The ministry trust is not a beneficiary of anything.
Okay, how does it work from?
So you can though. So can you make the ministry trust a beneficiary? Yeah. So that's up to you if that's what you want to do. So the way that I show you in the workshop is that the ministry trust is standing alone. It's not the beneficiary of another trust.
Okay, so the business and the family, that's what I'm trying to just make sure that I have it right. We started with the business. So is the family trust is the final beneficiary, correct?
Correct. Yes, and your children are the beneficiaries of the family trust. That's why you want everything to end up in the family trust, because that is where your descendants benefit from. They don't benefit from the business, they don't benefit from the ministry. They only benefit from the family. That's why you want the family to ultimately end up with all of the assets.
Okay, that's what I think I was trying to make sure I had clear. Because the LLCs and everything is operating within the business, but then the family trust is the beneficiary of the business trust.
Correct. So the LLC is owned by the business trust, right? If the business
Right.
trust is dissolved tomorrow, that LLC goes directly to the family. That is what
Okay.
you want. That is what you want.
And anything that is donated, like real estate and these things, go directly to the family. Like if there's a house, it goes into the family,
So you use the word donate. So when we're using the word donate, we're talking about donations and we're talking about the ministry. So is that the correct word that you're using?
Oh, Mike, the correct word was transfer. So
Okay.
so that's what I'm saying. You can transfer real estate and things directly into the family. It doesn't have to go to the business first. It
That
could go
is
directly
correct.
into the family.
Correct.
Or
Correct.
if you want to
So
donate.
These are separate
Go
entities,
ahead, I'm
right?
sorry.
These are separate entities.
Yes, I know.
Okay, go ahead. Go ahead.
No, okay, thank you. The family, what I'm saying is the family trust, you can transfer, or anyone, as you said, can transfer stuff into the family trust.
That's correct.
Things
Yeah,
can be donated to the ministry trust, and then
correct.
your business is operated through the business trust.
That's correct. Everything you're saying is
For
correct.
which the family trust is the beneficiary, and your beneficiaries, and as the tax gentleman said, you're moving this from business to family to ministry for tax purposes.
Right. So yeah, you're talking about the flow of money, but when you're talking about the transfer of assets, yeah, that's correct.
Okay. Thank you
got
very
it.
much.
Got it, Ray. You're welcome. All right,
I'm a
next we have.
slow learner, but I'm trying.
Oh yeah, no worries, honestly. And I know that you have attended several workshops, and I will tell you that that is the whole reason and purpose why we do this, because it is going to take you listening to Jeff Badu a couple times for you to understand the flow for tax advantages. It's going to take you listening to Brian Dorsey for you to understand, funding, right, and credibility, and OPM. Is going to take you listening to me a couple times for you to understand the trust agreement and trusteeship and operation, right? So I love it. I love it because just by you asking these questions, I know that you have clarity, because I'm like, you're absolutely right, Ray. So it's powerful. Thank you. So next we have Mona. Hey, Mona. Mona, are you available?
Hold on. Hello?
Hi.
Hi. Give me 1 minute. You, hi, Christina. How you doing? I have two quick questions.
Ma'am.
um,
Yes, ma'am.
the first one was the insurance. Like I say, I already have insurance, but is it best practice to get an IUL after our trust is formed?
That's a really great question. So do you already have an IUL?
No, but I have 3 insurance policies on me that's equaling up to 200,000.
Okay, so are these policies accumulating cash value?
Yes, State Farm, Americo, and Globe Life.
Okay, so you might be okay. It just depends on how they're structured. So just
Okay.
wait for our insurance class. It's coming up. I'm working on it, I promise. I was talking to the team
Yes,
earlier.
ma'am. It says
Yeah.
Masterclass April 13th, Q&A April 14th, and Wealth for You Trust April 15th. And my last question is,
Yes, ma'am.
my last question, deal with me, work with me. I'm a work in progress.
Yeah.
The iPostal. Am I missing it? Because I'm looking at the videos and the iPostal, they have the 3 plans, and maybe I misunderstood you. You said it was a form that we needed to do the iPostal address.
That is correct. Once you apply for an account, there is going to be a form that is required. I don't remember the number. It's some number. I don't know the number, but it is a form that you have to get notarized proving your identity. So you're going to have to give them, for example, your passport and prove your identity. Needs to be notarized, and that is for you to give iPostal One authorization to receive mail on your behalf. And that is what they need documented because of the USPS services.
Okay, awesome. Now, that's why I say maybe I'm overlooking. Was that in our Tuesday class or our Wednesday
Oh,
class?
I'm so sorry. I never
That's,
showed you step by step. We just provided you with
yeah.
the link.
Because that's what I'm saying. It has 3 plans, like the, let's say, $9.99, the $39.99, and the $6.99. And I'm like, well, what plan should we use?
So
Or
usually it's the second plan. It usually It's the first plan is personal, the second plan is for an entity, and then the
Oh,
third plan is for like a big time corporation.
okay. So if we have any issues or questions, we could ask that in QA on April
Oh
14th.
yeah, sure. Yeah, absolutely.
Okay.
Yeah. So I had to switch our Q&A. So our Q&A is going to be on Monday. Monday at 7. Wait, hold on, I'm confused now.
Awesome.
Wait, hold on one second. I think the Q&A is on Monday. Wait, I might be wrong. I'm sorry. Hold on one second. Oh no, yeah, it is. I'm sorry. It is Tuesday. Okay, yeah, our Q&A is Tuesday at 7. We have a master class Monday at 7. So one of our community members, he's big time into crypto. He's going to be teaching you guys about Web3. It's a game changer. So don't miss Monday, please.
Okay.
Tuesday is Q&A. So come with all of your questions.
Okay. Well, you have an awesome weekend.
Thank you, Mona. I appreciate you. I love it. I think I earned
Bye-bye.
it.
Thank you. Yeah, you earned it. You earned a lot of them.
Yay! All right. Next we have Alexis. Hi, Alexis. Welcome back. I'm sorry, I'm just seeing you.
It's okay. Can you hear me?
Yes, ma'am. We can hear you loud and clear. Hello. Praise God to the microphone.
Praise God. I hope you are doing well. Thank you so much. And I appreciate you and even all the questions that everybody has asked. I want to be quick, for your time and for everybody else. So listen, my last vehicle, right, where really sparked my interest, I thoroughly, after I turned my car in, because I'm a lease girl, turned my car in, but I reread the full contract. The full contract, of course, was owned by a trust. The dealership was owned by a trust. So now this is the thing, I want to get what I want, but I want to do it right. So I learned my lesson from reading that full contract. I'm the girl that'll read everything. So
Yes.
going forward, let's say you are me and you're a lease girl like me, what would you tell me to do? Because I want to be able to lease the vehicle, and I know I can Google this. I can lease it in an LLC, but they might have me be a personal guarantor, right? But I don't want to be a personal guarantor. So it's just like, what, I guess you guide me. And then of course I'll keep learning and research on my own. That's it, love.
Yes, that's wonderful. Thank you. So I will tell you that it is not easy to get a lease for a trust. It is not easy. So most companies will deny you. If you're leasing directly with Mercedes, I am not familiar with their process, so I don't know if Mercedes is going to allow you to have your lease in a trust. Okay. So some of the bigger companies, they will deny you. You have to understand it's for liability, right? It's not in the best interest of Mercedes to allow you to lease in a trust. Okay. So you will have to find a third-party company. I personally do not know of one. I haven't interacted with one to know of a third-party company. So there are third-party companies that you can get your lease through them, but once again, I am not sure if they will allow it for a trust. So that's why Jeff said it, and I'm in alignment with what he said, that it's easier, more seamless to do it in an LLC, but I totally understand your standpoint. So I think that it's worth it for you to do your due diligence and for you to, one, find out if Mercedes would allow it, and then two, find an alternative leasing company that would allow it. So go down that route first. Yeah. And then when you're done, let us know and post a picture so we can see you in a house. Okay, we want to see you in it.
Ooh, I got homework, but thank you so much. Thank you.
You're welcome. You're welcome. All right, next we have Tony.
Okay, I have a few more questions.
Yes, sir.
All right. So can I use my mother-in-law as my other co-trustee?
Yeah, there's no issue with you using someone that is related by marriage.
Okay. And so and then I got, how soon can you move the funds from one trust to the other?
There's no time limit or time period.
No time period. Okay. And how do you and when do you distribute the family beneficiary funds?
That's a great question. So you will determine what the distribution is annually, but as far as the actual distribution, issuing the distribution, you will determine if you want to issue the distributions either monthly, quarterly, or annually. So for example, we will determine what the amount is on an annual basis based off of the annual revenue, right? So if we're saying, hey, 100,000 came in, 50 is going to be allocated to distributable net income. So now you have that 50. So you have to determine, am I going to issue out the 50 to the beneficiaries monthly, quarterly, or annually?
Okay. Sounds good. Thank you so much. That's all I needed.
You're welcome, Tony. Next we have Vaughn.
Good afternoon. Thanks for holding the class. This is great.
You're welcome, Vaughn. Thank you for showing up. I appreciate you being here.
Yeah, I'm glad to be here. I had a question because right now I'm working with my insurance agent, and he was saying that whole life is going to benefit more when it comes to purchasing real estate long term and having that cash value. And I was hoping to explain to him your perspective on the IUL versus the whole life.
Yeah, so I mean, so IULs and whole life, they are very different. I think that both of them are great. And I think that, to be honest, I think that individuals should have both versus just one. It doesn't have to be, oh, I only have an IUL, or oh, I only have a whole life. Get both, right? More coverage, the merrier, right? Because the more coverage that you have, guess what? The more millions of dollars is going to go into your trust organization, right?
Right.
So if you're able to have both, if you have the funds for both. So I don't tell people get both. Why? Because they might not have the means to be able to flow money into both. One is guaranteed, the other one is not guaranteed, right? So for example, your whole life, it's guaranteed, it's fixed, right? And it's accumulating money, but that money is not called cash value. So it's accumulating cash value, but it doesn't earn interest, it earns dividends. Okay. Versus in that dividends is fixed. So 3.5, maybe 4%, right? Depending on the carrier. So it's a fixed amount, it's a lower amount. Okay. But it's still very stable. So a whole life policy is very stable. It's been around since, I want to say, the 1800s, right? So it's the end all be all, right? Now you have an index universal life insurance policy. That's the newbie on the market. So it's been around for 25, almost 30 years. It came around in the 90s. Okay. So it's newer, but it's putting you in a position to where you're going to earn more. So you are earning compound interest, and you are earning that interest through the stock market. Okay. So it's mirroring the market, and you have the potential to earn 12%, 15%, 10% versus 3.5. So do you want to earn 3.5? Do you want to earn 10, 11, 12? But the 10, 11, 12 is not guaranteed. It's based off the performance of the market. If the market is doing good, you're doing good. Okay. You're getting 11, 12, 13, right? But if the market crashes, you're getting zero, or maybe even 1%. If you're smart enough to put a floor of 1%, then the least that you can get is 1%, right? But obviously, when it comes to compound interest, it takes time for things to compound. It's not like an overnight thing. So I think that both of them are exceptional. And if you're able to get both, that's great. So I would not say, oh, this one is better than the other. What I will say is if you have young people like children, you want to put them in IUL because it's going, they're going to have more time since they're young for that money to compound, to triple, quadruple, right? So that is my response to you, Vaughn.
Okay, I appreciate it. Yeah, so that was the conversation I had with him. I was just saying, well, on
Good.
average, depending how long you have the IUL, then you could end up higher than just keeping it safe the entire way. So he was like, well, if you want to do that, I will. But he was like, I'm just saying I guess he said somewhere around 6% guaranteed is going to benefit you and have you more stable in a down market. You can still plan
Yeah.
on that long term. So is this just
Yeah.
kind of whichever one's whatever risk tolerance that I have based on,
Exactly.
because a lot of times in my real estate strategy, my acquisition strategy is all encompassed around um, relationships more so than it is the money specifically. So my however I get property is it interchanges based on the approach. It's not always market reliant. So that's just the kind of the one of the deals that I was trying to get across to him. I may not own the property I may not in a down market. I may not want to just purchase property. That might be a time to leverage my strategies in a down market versus just buying up a bunch of stuff. So, okay.
Yeah, I agree with you. So yes, your decision is going to be based on your risk tolerance. Absolutely. Yeah. And some people, they just want to choose stability. They want to choose, they want a guarantee. They don't want
Yeah.
to get to the point where on a down market, they're getting 0 or 1. So they're
Yeah.
like,
And I
okay,
think,
I'll settle with a consistent 6.
yeah, I think that's kind of projecting a little bit of projecting going on. But yeah, I totally respect it and I get it. Thank you for help.
Yeah, you know what? So life insurance agents, they have their favorite products, right? And
Yeah.
so if they're like, oh, the whole life is the end all be all, and traditionally, like it is, right? Traditionally, it is. The IUL is the new kid on the block. Like
Yeah.
who is really going for the new kid on the block, right? When
Yeah.
you have the granddaddy of policies, right? So they have their favorites and they're like, no, I'm gun hold on this and this is what I want to give you.
Yeah, that's cool. I respect it.
Yeah.
Okay, now I have a pretty clear idea on what the approach is, so I'll kind of move accordingly.
Sounds good, Vaughn. Good
All
luck with
right.
that.
Thank you so much.
You're
All
welcome.
right. Take care.
You're welcome. All right. Next we have Renault.
Hello, Christina. How you doing?
Hello, I am well. How are you?
Oh, I'm doing well. I'm here with my wife, Kyla.
Hi,
Hi, Christina.
Kyla.
Hi, Christina.
Hello. Hi, how are you?
Well, thank you.
We
All
so
right.
appreciate you being obedient to God and just working and doing everything. we, I heard this story yesterday about you on your knees praying and getting direction. It kind of brought me to tears a little bit.
Oh,
Uh,
thank you. Thank
we
you.
so appreciate you. We so appreciate you.
Oh, and I
Kyla's gonna,
appreciate
yeah, Kyla's gonna ask you a couple questions here.
Yes, ma'am. Absolutely. Thank you.
Miss Christina, just for clarity, I'm going to piggyback off of Mona's question regarding the iPostal address.
Yes, ma'am.
So for clarity, they ask for, you have to verify your identity, like you said. So you have to give them a passport. Wanting to still remain discreet, what address, because they would need a physical address where we receive mail. That's what they're asking for as well. So do we put our home address? They don't accept a PO box. How should we handle that portion of it, of the verification?
Yes. So the thing that I want you to know is that they're asking, but that information is going to remain internal. So they don't like sell your information to any third parties. So they're not going to disclose like outside of their organization what your home address is because they know that you're using this mail forwarding service for a reason so that your name and address are not on the forefront for that entity. So you just want to choose the company where you I mean, excuse me, not company, but address where you want to receive the information or the mail.
Right.
Yeah.
Okay. And that would be our home address.
It's the only way we can prove where we have mail come, because they're asking you to show proof of where the mail. So they want you to.
Yeah, and the reason why is because of USPS, it is illegal for them to accept mail on your behalf. So for them to be able to receive the authorization, that's why they have to prove it to the government, to the USPS.
I see.
Okay, my second question, Renat was trying to explain to me your explanation about opening up a bank account for the trust. From what he stated, the bank account should be opened up in the grantor's name, correct?
No, that's not correct. So the bank account is going to be in the name of the trust, and most banks will require a profile on file. In that profile, they want one for the grantor and one for the trustee. And the trustee is the one who's going to open up the bank account and be the authorized signatory on the bank account.
Okay, thank you.
Yeah, I thought I heard yesterday you're saying that the grantor opens up the bank account and that, okay, it's completely different.
No, so what I was saying was that their information is required. So it's very hard for you to open up a bank account without providing the grantor's information. The grantor does not need to be present, but the bank is going to ask for their information.
And the grantor is not signing anything.
No.
They just need a name. They're the grantor's name that's in the trust. Okay, thank you. Because that did not make sense to me to have it in the grantor's name.
Well, thank you so much for that clarification. Makes sense now.
You're welcome. You're welcome. All righty. All right, awesome. Let me check the chat to see if there's any questions. All right, so someone was asking about the state codes. So I think you're asking about the State Nonprofit Corporation Act. That's for the ministry trust, not for the business or the family trust. So it's available in your dashboard and your resources. That's the name of the resource. All right, and
Christina.
hi.
Yeah, hey, this is Leviticus. Hey, how are you? Great class once again. Appreciate all the information. Okay, great. So it wasn't. It was for the state codes, not the nonprofit. I have all that inside of the. Went to the portal and I got that. So I'm trying to get the different codes for the states, for like the family trust and the business trust.
Yeah, okay, what state codes are you referring to? Because there's no section inside of those templates that require you to put a state code. So what are you talking about? I'm unclear of what you're asking.
Okay, so like if I set up the trust in Florida, Delaware, they ask you for the codes for that. Am I saying that correctly? It's like a state, like a chapter or something like that.
So are you saying that there's a section in the template that asks for that? Who is asking?
Yeah, I believe so. Like when you in your indenture, you actually go through, and I think you went over it in one of them. I'm gonna review it again, but you went through and you actually put down a chapter for Florida.
Yes, that is in the ministry trust. And Yeah, that's only in the ministry trust.
Okay.
That part doesn't exist for the business or for the family. And so that is only for the charity to say that we are in alignment with the state statutes in that particular state for this charity.
Gotcha. That's all I need to know. I was just need to get some clarity on it. I thought maybe
Oh,
we
yeah,
needed
yeah,
some
yeah.
yeah, okay, cool.
Those for business and family, no.
Okay. All right. Appreciate it. Thanks a lot. And you have a great weekend.
You're welcome, Leviticus. You have a great weekend as well.
All right. Thank you.
You're welcome. Malachi.
Hey, good day to you.
Hi, good day to you.
Yeah, I was wanting to just ask again. I think I might have asked this question already, but do we should we be looking to get any kind of IUL insurance right now before we go to that session next week, or should we just kind of wait around and see what happens at the?
No, you should have your trust already set up and legalized because the trust is going to apply for the IUL.
Oh, I see. Okay, so because I'm still kind of a little bit behind on filling out the rest of the papers that we were going through the week because I was like had stuff that wasn't finalized yet, like the grantor, but now I got my grantor and still kind of having problems coming up with a name for the business trust. So I only got the one EIN right now. I need like two more EINs, is that correct?
Correct. You should have one per entity.
Okay. Okay. And yeah, I think that's all I was asking about the insurance to see should we get it now or just I know you said the trust, so we had to set the trust up first to let the trust get the insurance instead of putting it in our name and stuff. Yeah.
Yeah, that's best practice if you want to do it the right way.
Yeah.
Mm-hmm.
Okay, cool. And I think I had another question, but I can't remember it right now. Kind of, but I'll call maybe later or something. But we having a session next week though, so we'll still be continuing on with whatever we're doing here. So that's great.
Yeah.
I'm happy about that.
Right. So it's not going to be directly, it's not going to be an extension of the workshop. So our master classes are separate from the workshop and they
Right.
are they are from other educators that we have here that want to teach you on different topics outside of the workshop. So we're going to be talking about Web3 next week, and then we have a live Q&A for you to come in and ask any and every question that you have. So I know that over the weekend, you're definitely going to have some questions, so bring them on Tuesday. And then I know that you said that you are a little behind, so I highly recommend that you watch the recordings. The recordings are available on the online portal, so you can watch the entire workshop all over again. And
Mm-hmm.
we have every single workshop that we've ever done. So you can
Got it. Yeah,
watch.
I see all of that. Yeah.
You saw it? Okay, cool,
I
cool.
see all
Okay.
of that. I'm like, wow, we got a lot. I was watching the other one before this one started.
Yes, I love
Yeah.
that. Oh my
Yeah,
gosh,
we was
I love
watching the
that
other one.
because you're learning so much. And so if you watch
Mhm.
our previous workshop from March and then you come to the live one in April, it's retention season for you.
Right. Yeah. I didn't watch all of it, but I did watch quite a little bit of it. So yeah. But I get the gist of it. But thanks again.
Yes, you're welcome. You're welcome. You're welcome. All
Okay.
right.
Look forward to working further, you know. Thank you.
Yes, I agree, Malachi. I agree. Rudy, you have a question inside of
Oh,
the
one more
chat.
thing. I'm sorry.
Yeah,
One
go
more
for it. Go.
thing about getting together. I missed that yesterday.
Oh,
Yeah, I know you said you like to go travel outside the country, but I gotta go to the city of Atlanta to see my kids soon. So I don't know. Maybe we can do it
yeah,
down
so
there.
I'm gonna work with my team to put something available for July. If it's not July, then it's gonna be in August, but I'm rooting for July. So I'm gonna work with the team on that to see if it's possible for us to put together a live event. So we're
Okay,
gonna we're
cool.
gonna start working on it, and I was very transparent and let you guys know that I've never put in a live event together. So I have to leverage other experts to be able to pull it off for you guys.
Okay. You can do it.
Yay! I agree. Thank you. Thank you for the motivation and the inspiration. And I think that we should all gather together in person. We collectively, there's been a couple of us that came together in person in 2024 and in 2025. So let's see what we can do in 2026.
For
All
sure.
right. Yay. All right. And then, so Rudy, you have a question inside of the chat. So do you mind asking your question about the Secretary of State in the county?
Yes, it was when the lady was talking about, I got a little bit confused. So um business, I thought I had it and then I got a little confused. The family trust will be the beneficiary of the business, but then the ministry trust stands alone, but the family trust, can it also be the beneficiary of the ministry trust, right? Or
Yes.
do you
Yes.
transfer money to it, right? No. Yes. Okay.
Transfer.
So they both point at it and the family is beneficiary of both.
Yes. So ultimately, you want all of the assets and money to go to the family trust because that's where your family is going to be able to directly benefit.
Okay. Yeah. And I caught that, but then that wasn't said, so I was like, okay, am I a little confused? Yeah. Hey, if you need help, I've catered before. I've done that for the longest, but I even thought
Yeah,
about
yes,
maybe
I need help. Yes, I need
doing.
help, and I need the eye drops.
I never got your address. I wasn't gonna keep on pushing.
Listen,
But
I'm gonna send it to you today, okay? I need those eye
okay.
drops.
Yes. I was like, I'm not gonna say anything. So, but another thing, my wife, she was in fitness, maybe having the first 7 ways to wealth 5K run, and that would be a
Ooh,
nice. You
what?
go out on the community, you have people run, you tell them about, hey, you need a trust, and I say that because I might be talking too much, but we can talk later if you like. But the way you've been doing it, I think it's very organic, like you said. And I think if you start doing like advertising, you might get some riffraff. You know what I mean? Like people that are in it for, you know what I mean? I don't know. I don't
Very.
know. It's a lot better, word of mouth but anyways, I'm just saying. But a 5K run would be probably amazing.
Of course, right? And then we can donate
So,
the proceeds to a charity of our choice. That would be great.
yeah,
Yes.
and you get the word out. So yeah, we did 5Ks here when back in the day, but we had to hide from people because they were taking too much. People would just start taking. So yeah.
I
So
totally
whatever
agree.
I can help.
I did one before and it's very fun. Very, very
Yes.
fun. So we need to start we need all of these ideas. See, that's why we have to have a block party so that we can have all of these ideas because there's just so much and like there's so many of us here in the community and a lot of you guys are in the same city, the same state, but we can all come together in one city, in one state. So I agree. This is going to be great.
Yeah. Okay. Thank you for
Thank
the
you.
clarification.
You're
But we'll
welcome.
talk some more if you like. I have some great ideas. So
Okay.
even with the Spanish, like I had told you last
I
time.
know, yeah. So remember I told you that I was adding someone who is Spanish speaking into the team. So she's in the team, she's on the
Okay.
team, she's based in Miami, and I would love to have that component where we're assisting, Spanish speaking families. That would be great. So
Good.
yes, yes,
Okay.
thank you. Oh my
All righty.
gosh, I'm excited. Ah, okay, so the next question we have is how about when you purchase from a dealership? So, if you're going to purchase a vehicle from the dealership, you can potentially purchase the vehicle under the name of the trust. So it just depends on the finance company. So remember, I told you guys that is very challenging to get financing for the trust because of the liability, because you as the person are not liable, and these finance companies want you to be liable. They want you to personal guarantee. So that's the only issue. So it is easier for you to get the financing through the LLC. So it is best practice for you to put the vehicle into its own separate trust, and for you not to put the vehicle into a trust that you have other assets like cash, real estate, stocks, businesses. So would it be okay for my daughter to transfer her business into the business trust? So your daughter can transfer into the business trust, like that's not an issue. Let's see here. What other questions do we have? So the insurance guy will walk you through the different types of policies, yes. Both types of policies, but then, so we're gonna have one general master class where we're walking you through the different types of policies, and then each of you guys are gonna branch off individually, kind of like how you do with Jeff and Brian, to where they're gonna do an illustration based off of you. So you're gonna give them all of your information, right? Height, weight, age, everything, right? And then they're going to give you and then you're also going to provide them with how much income that you want to put into the trust. I mean, excuse me, not the trust, the life insurance policy. And they're going to show you how it'll be structured based off of you. So if I transfer my house into the trust using a quick claim deed, will the mortgage company ask for the full balance of the loan? No. So you are if you transfer your property into a trust, you're protected from the due on sale clause, which is the accelerated clause, which they would ask you for. So the due on sale clause is only applicable if you transfer it from your name to a non-family member, or from your name to a business that you're not associated with. And another thing is with the HELOC, a trust can qualify for a HELOC. So when it comes to financing, it's it just depends on the company, okay? But a trust can qualify. Now, what I would tell you to do is if you're able to obtain that HELOC prior to transferring, then yes, because I've seen it in certain situations where in order to qualify, they had to take it out the trust, get the HELOC, and then put it back in, because with certain banks, they want you to be able to prove income. And if your trust doesn't have income, it won't qualify for the HELOC, right? And you need to prove income so that the bank knows that you're able to pay the HELOC back. So if you're able to get the HELOC before you transfer it into the trust, then that would be ideal. So Malachi asked if anybody's in North California. That's cool. I used to live in San Jose. I worked in San Quentin, and also what's the name of that? San Joaquin. I've been almost everywhere. So I wish I knew before transferring. You wish you knew about the HELOC? So it's not very hard to, so one, you can get a HELOC for a trust. Go to First Citizens Bank. I know that that's one of the banks that will issue a HELOC for a trust. Okay. And it's not very challenging for you to take it out, close on your HELOC, and put it back in. It's just paperwork. Is it worth it? I mean, yeah, if you need that line of credit. Like, that HELOC can put you in a position to where you're able to build wealth. Just imagine having access to the equity in your home. So it is worth it. All right, so with that being said, I would like to know if anybody wants to come off of mute and give us feedback on their experience here on the workshop. So how did the week go for you? So any comments that you want to make based off of your experience, we would really, really, really appreciate it. So let me know how the week has been, because feedback is so important. As you guys mentioned, right? I think Shannon had mentioned it, that she has been here since March of 2025, and she has seen the growth of the workshop. And I know that a couple of you guys have as well. So the feedback that you give us, we actually take it and we implement, and we put a plan together in order to make your experience a better experience. And so we do have other things that are going to come, like coming soon, right? Because we just want you to have, we just want you to have the ultimate experience, and for it to be clear, concise, for you to have all of your templates, resources in one location, for you to get all the training that you need, for this to be a beautiful A to Z process. So, does anybody want to come off mute and let me know how their week has been? Don't be scared. Ivy's laughing.
I'll start it off. I was like, okay, I talked too much, but I just want to
Go
say
ahead.
amazing as always. Oh,
Go ahead. Tell us, Rudy.
okay, amazing as always. I actually felt like I wanted to log on like months back, but I felt like, man, they're gonna think I'm DUMB because I'm on it again. But I had to get over that. But it was amazing. I see how people keep getting back on it. I'm just excited. I got excited again, so
Hey,
thank you so
yeah.
much for everything. It was amazing. Amazing.
You're so
Thank you.
welcome. Rudy is a lifer. Rudy is a lifer, and we recommend that everyone come on. So jump on whenever you see that we're doing a workshop, jump onto the workshop so that you guys can get your questions answered, so that you guys can see the process all over again. So for example, if you're not working on a particular section right now, so let's just say right now you're only focusing on setting up the trust, then that's fine. So this workshop is all about you implementing the flow in order for you to set up the trust, right? But then let's just say 2 months down the line, you are now in the space where you want to transfer assets. You jump in and then you go through the process of transferring assets. You need to get that refresher in there, and then I'll be able to show you step by step so that you're able to do it the right way. So you can also join on different days that are applicable, right? Maybe right now you're not into funding, but 3 months into the future, you're like, oh, let me jump on Thursday because I know that Brian's going to be there and I know he's going to be talking about funding, and I can get a refresher, and then I'm ready now. I'm ready now. I'm fundable, I'm credible, and I can jump in to getting the funding that I need for the trust. So that's why you guys have lifetime access to be able to just do that. So our next workshop is going to be May 4th to the 8th. So just keep that in mind that week. Anybody else? Anybody else?
I have a few things, Christina.
Hey,
How are you?
great.
So the class I find that you put together this week was absolutely incredible. I've actually been reading about trust and studying trust for about 3 years now. I have The Art of Passing the Buck Volume 1, which I read twice. I have The Art of Passing the Buck Volume 2, which I've been through in different occasions. And I also have Gilbert Law Summaries, which I've read through several times. It's the analogy I always put together is like you can give me all the books you want on how to build a Ferrari, and I'll know it in my head, but putting the tools in my hands and actually physically doing with my hands is where I was lacking the experience. And that's kind of what I was hoping to get out of here. And it looks like that's exactly what you have. You have the hands-on experiences that I need. You have the tools that I need to get my hands on to actually do it, and how to actually step-by-step move things physically from one place to the other, which is absolutely amazing. And not only that, you have a team of people that are here to help you and help us. And it's awesome. It's so awesome. We're so grateful and so thankful. So thank you.
Thank you. Oh my gosh, Edward, thank you so much. I appreciate you saying that. And you're absolutely right, right? A lot of us, it depends on the type of learner that we are, right? You can just hand me a whole list of instructions, but like sometimes I need some hand holding, I need support, I need, to be able to have the physical resources versus you wanting me to do it all by myself independently. So you are so right. Thank you, thank you, thank you so much. I am so glad that you know that the team is available for you. So that's exactly what we wanted you to experience, and it sounds like you have. So thank you, Edward. Love the thumbs up. Next we have Malachi. Hey, Malachi.
Hey, I have my wife here too, Monique.
Oh, hey, Monique.
Hi, Christina.
Hi.
I just want to say your spirit, that's what it is about. It's your spirit. It's infectious, And so you're feeding your spirit back into us, and it comes back, it multiplies. But there's a lot of people online teaching about trust. Um, they sound incredible, but no one does it like you. No one is going to guide us through. They're not going to hold our hands.
You hold our
Even
hand.
though, I know a lot about trust, but it's in my mind. But like the gentleman said, physically, you're guiding us through the pages and the actual page and going to the actual place,
Word for
word for word, to where we can see it. You know, it's not just skimming over it, and then if you don't catch up, something's wrong with you, because if we're not caught up, we can actually go through the recording of this, press rewind, press fast forward, or whatever it needs to take. And your presentation, when we paid for this, you had a presentation that was sent to the email that we can see prior to even seeing you this week. So that's just like truly, yeah, it's been a blessing. You've been a blessing. And like I was saying, so a lot of people teach trust, but they come across truly abrasive. And so you're the young lady who does, and we feel your spirit, and that's why you were chosen. But thank you so much, and thanks for the community of people. And yeah,
Thank
you're
everybody on this
heaven
call.
sent.
Everybody, y'all. Everybody. This is for all of us. We are a community now, and a community that prays together, stays together.
That is the truth. Absolutely. Thank you for saying that. And Monique, you just hit it exactly right. That it's our spirit. So I feel like we are the same. And so that's why, Malachi, you're like a community that prays together, stays together. And I'm just all for it, because God is the one who told me to share trust with people, right? God is the one who gave me that authority. God is the one who gave me the price, right? Like the price is $2,500. It's dirt cheap, and it's not
Yes, it
it's
is.
not something that I chose. It's something that, once again, I was on my knees and I was praying to the Lord, and God gave me that price, and I was actually instructed to keep it. Guys know or at least, I'm so glad that you guys chose this program. I'm so glad that you chose me to be your instructor. And I'm so glad that you guys know and aware that this is a gift from God. And God just wants to expose you guys to this. I was actually speaking with someone like 2 or 3 days ago, and this is something that I've been knowing for years, but I'm led to share it. The Bible is a trust. Okay, so it is an indenture, it is an agreement, it is a set of instructions, and Jesus is the trustee, and we are the beneficiaries, and God is the grantor. So that was revealed to me a couple of years ago, and I was like, absolutely. So I'm just, following a set of instructions, and I just get to pass on that divine wisdom to you guys because there's a wealth transfer that's happening, and we have to prepare for it. And I'm one of those people that are here to help you prepare for the wealth transfer. A lot of the things, so I would tell you that every single thing that I teach in this program is a part of it, okay? From the insurance policies is a part of the wealth transfer. Even cryptocurrency, right? Even cryptocurrency, when you guys learn about it, real estate, land, right? The very thing that God has given us, right? It's a part of the wealth transfer. Trust, right? Trust is a part of the wealth transfer. So everything that you guys need in order to prepare it's here. And I just want you guys to be exposed to this so that you guys are influenced in the right direction. So thank you so much for just knowing that and realizing that and just being in alignment. And I'm so glad that God led you here to this community. And Malachi, you're so correct. Like, as long as we stay together, like, I want us to do life together. That's why I'm like, hey, stick around for a while. Don't only just come in for 6 months or 12 months or 18 months, right? Stick around for life. That is strategic. That there's a reason why we want you to be here for life, right? And we want to grow with you. We want to know about, about anything, about your family. So I'm so glad that you guys are doing this together as a family unit, right? Husband and wife. I love to see it. I really do. So you guys are powerful, and thank you for being here. And I want to see you in any and all workshops. And just know that me and my team are available to support you, to help you, to guide you, because we don't want you to just be here and listen. We want you to implement. We need you to take action. We're going to hold you accountable, right? So that you can actually carry out everything that you're supposed to, right? Become that trustee, get the bank accounts and everything that you need. So thank you so much. Thank you. Thank
Hey,
you.
let me ask a question real quick.
Yeah.
I don't think I heard anybody ask this, but if we're working a job, I have a job, and I have to sign my name on all these papers because I do like petitions and ballot measures and stuff like that. What's your thoughts on me switching from being, well, I'm kind of an employee right now. I don't like putting my name on stuff. I'm real private. But the declaration has to be filled out with a name and stuff, and they was trying to get us to use a EIN and stuff like that, and I kind of didn't understand few years back how do you do that? What's your thoughts on how to circumvent your way from being given legal joinder and just getting into the private, but still able to work though? I mean, I don't know if I can still do it, but
You can still do it. So you just have to contact the payroll company, but you do have to redo the forms, right? So as long as that employer allows you to do it, which most likely they will, then there's like a W-9 that you have to fill out. And on the W-9, instead of you putting yourself personally the way you have already done, you are going to put the trust information, and you're going to put the trust EIN instead of you operating with your social security.
that would be on the W-9. So I would have to talk to my coordinator and my office manager and just change
Yes,
it with them. And then
yes,
that's all I need to do. And then when
yes.
I do a W-8 BEN or like at the end of the year or when they send me that paper or
So
is
so
it a
typically
W-9?
Typically, it's either or. So the W-8 is like for people that don't have a social security.
Oh, I see. Got it. Got it.
Yeah.
Okay. So I would
So
just do it the regular
you're gonna
way, and the trust would
you're
go
gonna
on the
yeah, on the W-9. Yeah, so if
oh,
you pull up the W-9, so hold on, let me see if I could pull up the W-9. Let's see here. W-9. Can you see my screen? Malachi, can you see?
yeah, yeah. Yeah, I can see the W-9.
Okay, so when you signed up with your employer, you put your name and social, and that's how you're operating now. So you have
Right.
to let your employer know that you want to change the way that you're operating and being paid. And so now you want to operate as an entity. And so what you're going to do is you're going to put the name of the entity. So typically you'll put in number 2. And then for number 3, you're going to, so what you previously did was you put the individual,
Individual
right?
sole prop.
And
Yep.
then here you put the social. So you see right here where it says trust.
Okay. Yep.
So you're going to choose trust, and then here's where you put the EIN.
And what trust is this going to be? The business trust?
Yeah.
Okay, got it. Okay, I just want to make sure. Okay, yep.
All right, that was a great question. Thank
Yeah, I'm
you.
glad. I hope I clarified that for a lot of people that's working and stuff, because we we want to keep our little job, but man.
Yeah, so I'm going to tell you that it depends on the employer. Not every single employer is going to allow you to be paid under your entity. So I'm not telling you that it's 100% going to work because it depends. The employer also has to agree.
Oh yeah, that's my boy. He gonna agree. Oh, he gonna
Oh, then
agree.
you're good. You're
Oh,
good.
that's my boy. Oh yeah, yeah, yeah. I got
Okay.
him. I got the manager. I got them all in my hand. I got them
Okay.
all right here. Oh,
Yeah. Yeah.
I'm
Usually
sorry.
people
I'm
don't
loud in country.
No, it's okay, but yeah, usually it's a seamless process. So yeah, you're good. Awesome. I'm happy for you. All right, next we have
Thank
Alexis.
you.
Hey, Alexis, you're welcome.
Hi, Christina. I just wanted to give my feedback. I told you I had signed up midnight. This is one of the best things I've done thus far this year. And I'm also, like I told you prior, I'm also a realtor. So I'm around a lot of men and I know a lot of contractors. So I told them, like, hey, let's take this together. But they just didn't want to do it. And so I pray a lot as well. But it's like I feel like you gave me and everybody else on the call the baton to go forward because now the guy that I did tell to get on, he's like asking me questions because I think for me, people know that I'm very detailed and that even though this was a lot, and y'all gonna laugh, after these sessions, I had to take a nap. I'm sorry. I'm sorry. Woo, girl, I said you got me feeling like I'm back in college. I had to take every day, y'all, from Monday to I'm gonna take a nap after we get off this call. But I still got y'all gonna laugh. I still got conditioner in my hair from yesterday. Didn't even wash it out. I done worked out and this, that, and the third. I said, look, I'm tired. But this is the best thing that I have done this year, and I'm so glad that I stepped out on faith and did it. This is absolutely life changing, and I'm glad. See, it's one thing to see, it's easy if I wanted to go smoke and drink with somebody. Hey, girl, let's go. But when I say, hey, let's do business and trust, it's like, I don't know. You do it. And I hate that because a lot of the times I try to pull people up, but it's always Alexis by herself. So here I am. Like you said, you gave us the baton, and baby girl, I'm going to run with it. You hear me? Like I've never ran before. And thank you to your staff as well. Ivy has been amazing. I don't know all of your staff, but Ivy has been amazing. She's been on it, getting right back to me. Like you really have a good team. And I'm just glad that you answered the call because I know that can be hard.
It
And I know
is.
you said you didn't like showing your face, even though you're a beautiful woman. I'm the same way too. I got to get more on social media, but I have a love and a hate relationship with social media. But I'm glad that you answered the call. And like you said, you didn't have to do an ad or anything. God made sure that he showed you your people. So you see
Yes.
how the Bible says that, like you're teaching us to fish. And baby,
Yes.
my neck won't be full. So God
Oh,
bless you. And I'm so thankful for you on that. And Rudy, I loved Rudy too, even though he felt like he talked too much. That's your gift, Rudy. Like, don't ever shy away from that. It's okay. Every question you were asking, I was writing it down. So don't, that's the thing. They try to, when we were children, be quiet, shut up. But it's like, no, we need to know this. So, Rudy, don't be afraid to ask questions. I enjoyed it.
oh
That's
my gosh, Alexis. Oh, we love you, Jesus. Yes, you pouring into our cup. I love that. You know what? See, that's why I love us doing this as a group because look at how you are tuned in with Rudy, right? And that's why we are here collectively because we're feeding off of each other's energy. He's asking all of these good questions and you're writing it down. You're like, yeah, I wanted to know that too. Thank you for clarifying for him because you clarified for me. So and yes, I did. I answered the call. I was like really negotiating with the father. I was like, God, you sure? Like, you really sure about this? So it is a blessing that all of you guys are here, and I don't take it for granted. I appreciate so much that you guys are here. I appreciate that you're a part of the community, and I know that you guys are pouring into the community and everyone. I want us to be connected, and so Alexis, what you experienced, I have heard that before where they want you to be the guinea pig, where they're like, you go do it first, right? And then we have to see your success and your track record, and then we'll take the leap of faith, right? And so that's unfortunate because you're gonna leave them behind. But that is okay because like I guess they didn't want to answer the call. So that's totally understandable, but you just be that good example for them, Alexis, and lead the way. And so I love how you're saying, yeah, I received the baton and now I'm moving forward, right? And Rudy's talking about a 5K, so let's go. We're all going to be running forward. It's beautiful, but we get to do it collectively as a group, which is, I feel like this is like the most important part because we were not put on this earth to do life alone. So I want us to do life together. And we are pretty much we're all the same, right? Like I personally like for me, I feel like the people that are attracted here to this program, they are just like me and I'm just like them. And we are generational curse breakers. And so it's going to take us to do the scariest thing ever. And that's what you're doing, Alexis. You are doing the scariest thing ever. Do you know how many hours you've been sitting on that chair? Right? Just soaking it all in, just soaking it all in, right in you probably got carpal tunnel, just like, what is she saying now? Da, 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 right? So it's like you are doing the most scariest thing now, but it's because God chose you to be the generational curse breaker in your family. And so sometimes we're stuck right in the middle where we got to do it for our parents because they weren't given this information and they haven't been exposed. And then we got to do it for our descendants and our kids and our children and their children. So this is the ultimate sacrifice. And that is what you're doing, Alexis. You're doing the ultimate sacrifice for you, for your entire bloodline. Honestly, the people that came before you and the people that's coming after you. So continue to do the hard work. I am so proud of you. I am so proud of you. Wow. Thank you for being here, Alexis. And it's refreshing to see you. Next we have Ray. Hey, Ray.
Hey, okay, this is probably for the other members of the community. Before you all decided to purchase this program, did you all say a prayer before you put pay or send, right? Because I think I did because I had just, yep. I had just, I had just purchased another program before I got this one. And while the other program was good, it was like this one really resonated with me. And so I went back to the other program and said, hey, y'all ought to check this out. So if y'all on here, hi. Anyway, thanks, Rudy. I appreciate you too. But I just want to thank you for your patience. You have patience. And I don't know that I have that patience, but I know you've been patient with me because I ask a lot of questions because I'm a little type A, so I have to push myself back sometimes. But thank you for being patient. So I'm glad I pushed the button. I'm
Oh,
totally satisfied, and I am really, really grateful. And I'm grateful to this room because all of these questions, I have a whole book full of notes. And I'm hoping that I can continue to learn from you and from my colleagues. Y'all have a wonderful weekend.
oh, you too, Ray. Thank you. I'm so glad that you prayed. Oh my God, that is so beautiful. And I'm glad that you know that God led you in the right direction. And I am so glad that this program really resonates with you and that you're able to gain the clarity. I'm so proud of you because you are giving me the steps. And I'm like, yep, 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 correct, correct, correct. So I know that like all of the dots are connected and you see the full picture now, which is beautiful. And just know that we are here for you, right? So this is a lifetime endeavor. We're here for you, but just know that like this is a gift from God. So I personally don't want to take credit. I'm just a vessel that he decided to use in order to provide all of this wisdom and knowledge. And you're in the right place, Ray. So I'm glad that you took that leap, you prayed, and you pressed the button. So thank you for being here. Next, we have Latanya.
I learned how to do that on mute this time.
Ah, so beautiful.
Piggybacking off of Alexis and Rudy and everybody that spoke. I didn't have to pray when I pushed the buttons. I was like, Lord, I need my funds because you're daddy and I don't have this right now. And this is just how good God is. I went on one night just on my computer with my bank account and I was like, I'm asked for increase. And when I tell you I asked for the increase right before my birthday and they popped it up twice my credit score limit, I was like, oh, well, we don't have to worry about what we're doing with this because this one right here, she's not going to have to worry about the things that, and that's why I brought her on. I'm at work right now, so I'm a hairstylist, so I had to come off, but this one right here is the reason I pushed that button. It wasn't even, I prayed before. And let me say this. I saw you about 2 years ago, maybe, on an interview with some dude. Like, it didn't even look like you and him belong on the same couch. But you was there, and I was like, I don't know her name. I didn't save anything. I didn't do anything. God, you got to bring her back to my space. And I'm scrolling through old YouTube stuff, and I'm looking, and I'm moving, and I'm doing all the things. YouTube stuff, Nana. We just only do Prime time. We don't do YouTube. We only do Prime. But when God put it back on the radar in YouTube, I was like, yep. So that I told y'all this in February, but I'm gonna tell you again. We don't do YouTube either. No. This is what I gave myself for my 55th birthday. That was my gift to me. I didn't take a trip. It was Super Bowl weekend. And the Seahawks won, so that was a gift too. I didn't do anything except show up. We don't do YouTube. I showed up in this class every day in February, like my life is about to change. So that's my $2 for today. Thank you. Thank all of y'all. Thank the community. And I will be tapping in more. I got all my trusts done, by the way. I got them all done. I just got to go. I got them all done. I got my one EIN and I just got to go get them notarized and we're solid. We're going to start this funding and get this party started.
Congratulations. 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 What a beautiful gift. See, I said this is a gift from God, but look, she gave herself this gift for her birthday. Like that is such a major accomplishment. And I'm so glad. And look at how God is able to orchestrate things in our life to make it possible for us to experience these blessings. Like that's a miracle in itself that you like, okay, God, I want this increase in this overflow. And then it just comes into fruition. Like God will open up the right doors for us and God will also close the wrong doors. So I'm so glad. Oh my God, this is a blessing. blessing. I'm so glad that you even prayed for that, and then God was able to give you access, because now you are here, and that is one of the greatest gifts. So congratulations. And I see that you're doing it for your descendants. I see you doing it for your entire bloodline. So that's why I'm saying, that's why we are in alignment, LaTanya, because we are the generational curse breakers. You are the generational curse breaker. So you have to, like, this is just like, I feel like this is a calling on your life, right? Because now your kids, they are going to be free. They are going to be set free from the bondages, right? Like me, I grew up in extreme poverty. When I say extreme poverty, I mean extreme poverty. I mean homelessness, no utilities. Like that is just how it was for us, okay? Like, and those are my humblest beginnings, and I wouldn't trade it for the world. So I know what it's like. And so we are the individuals, everyone on this call, we're the individuals that are breaking the chains of poverty in our family, right? To where our children and our children's children, they're not going to have to go through what we went through. My children will never experience homelessness. Never, never, never. Why? Because their mom experienced homelessness. And guess what? She broke those chains. And so that's what all of us are doing here. We are generational curse breakers, right? We are the ones that are changing the entire trajectory of our lineage, of our bloodline. So we have to be here. We have to be present. We have to set up the legacy. We have to set up the trust. We have to get the funding. We have to acquire the assets. It's a must. And so we are all answering the call, right? It's not just me. You think that it's just me? No, I'm just a vessel so that you can get the information and access to, to these entities. But it's you. You're answering the call. God led you here to do this for a reason. I promise you. I promise you. So I'm so proud of you guys. I'm so proud of each and every one of you, because this is not easy. There's no part of this that is easy, no part. And you're doing the hard work. And that's what it takes. It takes sacrifice. And I'm telling you that your children, your grandchildren, your great grandchildren, they are going to be so grateful for everything that you did. They're going to be like, look at what grandma did. Look at what great grandma did. Like, and that's what the legacy is all about. So a lot of us, we think that the legacy is, oh, okay, I left the house and I left the car. No, it's about the impact that you have left behind. That's what they feel. They're like, look at what happened, right? Look at everything that she has instilled inside of me. I'm a successor. I'm a trustee. My children are beneficiaries of a trust organization because of what great grandma did. Wow, I have chills. I have chills. Oh my God, God is good. Woo, Lord. Oh, I'm overwhelmed. It's just overwhelming. It's like, wow, God, look at you. Like, and so I just give all the credit to God, because I didn't come up with this. And I promise you, I'm super honest. I did not come up with this. Like, this is not something that I was just walking around, oh, I'm going to create a trust program. No. Mm-mm. No, this was something that was just downloaded into my spirit. It's like, you have to do this. And it has to be now, not later, not tomorrow, now. Now, 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 now. So thank you guys. I appreciate you guys, and I love you guys so much. We are going to wrap up the workshop. We're going to wrap it up. The next workshop is May 4th to the 8th. So I hope that you guys are here for the next workshop. Your homework is, one, you are going to receive an email asking for a survey. So we just want you to provide us with some feedback on the survey. And what we do is we take everything into consideration, whatever you put on the survey. So if you can take 5 minutes out of your time, it's already sitting in your inbox. Thank you so much, because me and my team, we evaluate every single survey. So that is your homework. Your other homework is to book those calls with Jeff Badu and with Brian Dorsey and his team, so that they're able to just get you, in the beginning stages of funding and tax preparation. And then we do have a master class next week. So on Monday at 7, we have a master class. Tuesday at 7, we have a live Q&A. So I do want to see you guys on Zoom next week, Monday and Tuesday, so that we can continue on with this training and with just being connected as a whole. So without further ado,
Wait,
we are.
Christina, I'm gonna be like Rudy.
Yeah.
Listen, you said the Bible is the trust. Girl, when you said that, that knocked me out. I want you to just finish that and I'm done. I done took on Brother Rudy. That's my brother right there. I had to hold on, Christina.
Rudy is the best, I swear. Oh my God. Listen, Rudy had us choking up crying, right? Wasn't it, Rudy? Rudy had us choking up crying like his first time that he did the workshop. Lord have mercy. We was in here with the Kleenex, like, right, Rudy? So,
I couldn't hold it.
right. Oh
I
my
couldn't hold it.
gosh. Yes. So this is what it is, right? So God shared with me that the Bible is a set of instructions for um for our descendants, right? So for God's descendants, right? And so we are God's descendants, right? So we are the beneficiaries. And the trustee, right, is Jesus, right? He showed us exactly the way that we need to be operating. So he's the trustee of the trust. So God created, this agreement, this contract, this covenant, right? That's exactly what it is. So God created it. And it was a verbal agreement that was expressed into what we call a Bible, right? That's why they call it basic instructions, right? That's what it is. It is basic instructions. God is the grantor, Jesus is the trustee, and we are the beneficiaries. So it's for us to be able to receive our inheritance, right? As long as we abide by the rules, right? Those are the terms and conditions that was set for us. We're going to abide by them and we're going to receive our inheritance. And that's what it is. God shared that with me and it was mind blowing to me. And I was like, wow. Right. And so I'm glad that you guys know. So thank you to God for allowing me to share it, because it's not something that I talk about every day. I'm very like, shh, like, I don't know how much I can say. There's a lot in here. But yes, Alexis, thank you, thank you, thank you. I'm glad that you're aware and I'm glad that everyone is aware. So I hope that you guys can just take that information and move forward accordingly, because it's powerful. It is powerful. Wow. So I love you guys so much. I want to see you guys next week, okay? So Monday and Tuesday at 7 p.m. Eastern Standard Time, come into the building. We're going to learn about cryptocurrency, and it's a part of the wealth transfer, and we're going to learn and then we're going to do Q&A so I can answer all of your questions and you can get some clarity. So without further ado, we are gonna end the workshop. You guys have an amazing Friday. Like, yay! I'm excited that it's Friday. So you guys have an amazing Friday, an amazing weekend, highly favored. You guys are blessed, and I love you guys so much. So I will see you guys next week, Monday. Bye. Rudy said, woo woo, woohoo. Bye, everyone.